a facial cover is put in place to make sure that there is not more community spread.
It's interesting you say you were kind of dragged into the reopening. Now, there's a lot of different reasons why. I mean, Birmingham obviously is more urban than the rest of Alabama. It's kind of a blue ring in a very red state as well. And your population is very vulnerable to COVID. So explain some of the hesitancy there. And as you kind of start to allow places to reopen, are people coming back? What's demand like?
And so the hesitancy is double. It's in one hand, we have 1 out of 5 people over the age of 60. 3 out of 4 people are Black. Unfortunately, we have too many people with underlying health conditions and pre-existing conditions that lend itself to, if they catch the COVID, it's harder for them to recover. You add on top of that, we are in a urban dense city. We have the highest population within the state of Alabama. And then you add on top of that, our cases continue to increase. Just over the last 7 days, we've had 197 new cases and 14 people have died from the COVID-19. When you add all of that together, clearly we have to do things that are very different from the other cities within the state of Alabama. As it relates to the other part of your question, I believe that as elected officials, we cannot predict consumer behavior because there's still fear and anxiety of people coming out. I think what we have to do is find more creative, innovative ways to ease some of that fear by, let's say, closing down the street. And instead of people eating inside, possibly they can eat outside of a restaurant. I think we have to come up with other creative ways like that to make sure we decrease that fear and anxiety.
Yeah, that makes sense. And you also, or we mentioned this program that you have to rehire furloughed workers. Now, so people know Birmingham is a very industrial city. I think you do a lot of car and related manufacturing there as well, which has been a hard hit industry. So how does that program work where you take furloughed workers and what are they doing for the city? And how long do you anticipate that can continue?
Well, it's twofold. BHAM Strong was created to support the employers who we know only had about 14 days of cash flow. And so through a public-private partnership, we raised about $2.4 million to support small businesses within our city. That program supported not only 90 businesses, but it was laser focused for legacy businesses and minority businesses. In addition to that, the BHAM Strong supported these hourly workers who have been laid off. We've had about 800 people to apply, and so far we've hired about 145 people who are being paid anywhere between $13 and $22 an hour to support the COVID-related issues. And so this is a ready-to-work program for those hourly employees who've been laid off, but also supports the community work we need in response to the COVID-19 emergency.
And like you said, kind of helps restore confidence somewhat so people aren't so overwhelmed by the crisis. Mayor Woodfin, it's great to hear all of that. Good luck with it. We're, obviously sorry that the coronavirus has been so hard on your city. We're watching to see what other efforts you have to take. But thanks for joining me today to discuss it.
Kelly, thank you so much.
That's Mayor Randall Woodfin of Birmingham, Alabama. Still ahead, as theaters are closed and people are streaming more from their couch, Apple TV just paid Sony big bucks for Tom Hanks' newest flick. The CEO of Sony Pictures Entertainment joins us to talk about that and the future of the movie industry in general as more companies eschew theatrical releases. The Exchange is back in 2.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Okay, here we go.
With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL show, where a rotating cast of Ringer experts talk with players, coaches, and special guests about the NFL landscape.
A lot of the other teams that we consider...
Or ESPN's NFL Live.
If there are some delays because of the COVID-19...
Search sports on TuneIn to explore these pods and much more.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history.
There it goes, 3-2 pitches, hit in the air and hit well. Center field, Bader back, at the wall, it's gone!
Search classic game replays to relive some of the great contests in America's pastime.
Ground ball out to Jackie Robinson, up with it, over to Reese for one, back to Hodges. It gets away from him. Barras trying to go to second.
It's on demand, it's free, and it's only on TuneIn.
It's TuneIn Sports on this day. On this day in 1991, Chicago Bulls and NBA superstar Michael Jordan is named the NBA's MVP.
Here we are with Michael, surrounded by his mom and his dad, wife.
Free app now.
Welcome back. When it comes to the streaming wars, Sony Entertainment took a different route than most of its competitors and chose not to launch their own service. Instead, they've become something like an arms dealer to the industry by selling their content to everybody, to the highest bidder. Today, the company proved just how lucrative that can be, striking a $70 million deal with Apple TV for streaming rights to Sony's new Tom Hanks movie. With us now to talk about that strategy and more, Julia Borston joins us with Sony Pictures Entertainment CEO Tony Vinciquerra. Julia?
Thanks so much, Kelly, and Tony. Thanks so much for talking to us today.
Hi, Julia. How you doing today?
Good. So interesting to have you come talk to us on the heels of this big deal to sell a movie that was intended for theatrical release in June to Apple TV Plus. Now, what I'm wondering here is why you didn't just delay the release, as Sony and so many other studios have. Why did you decide to sell it to streaming instead?
Well, Julia, as you know, there are tremendous unknowns about when theaters will open and how many people will be allowed into theaters, what the percentage of seats that will be allowed to be filled. And when theaters do open, there's going to be a tremendous logjam of films. So dating films right now is a really difficult process, as you would expect. So, we have this opportunity, and this is not a practice that we expect to see happen many times, but we'll see a few times. We are completely committed to the theatrical world and theatrical business, and that is our primary business. But this opportunity arose, and we took it.
Now, you did reschedule a number of big films to early next year. I believe you have one in January, March. But tell us about your outlook for moviegoing. I mean, are you concerned that audiences just won't be ready to get back to theaters this fall? Do you think that audiences will return at more typical numbers next year?
We think that theaters will provide a safe environment for people to go back to theaters. It will take a little while, I think, for people to have the energy and enthusiasm to go back to theaters. But we do believe it's going to happen. Just look at what's happening when the beaches are opening around the country. People are flocking to them. Maybe not in the safest, best way, but people are anxious to get back to their normal lives, and we do think that theaters will return in a very strong way, albeit with some restrictions.
But it sounds like you think maybe not until next year.
It's hard to tell. There are so many variables at work here, not only on the theatrical experience, but on the production experience, which is another big variable that has many constituents who will have an opinion about how productions will begin and as you mentioned, how theaters will reopen.
Now, speaking of production, how much has your content pipeline been impacted by the essential production shutdown almost everywhere? And when do you think you'll be able to start to get productions up and running again?
Well, we're completely shut down. We have 50 TV shows on air in various platforms in the U.S., virtually every platform in the U.S., and we have about 60 other international productions on the air. Some of those international productions have already begun in Germany and a few other places, primarily and non-scripted, have begun production. So we're starting to see a little bit of thawing of that side of the business. In the U.S., there are a number of constituents who will have to agree to go back to work, and those conversations are happening right now. And look, I'm hoping that by September we'll be able to see, late August, early September, we'll be able to see some productions get back to work. There are some places around the world where productions will begin a little earlier. Czechoslovakia, for instance, where we have a TV show filming, we have a movie filming in Germany. We're hoping to get back up and running. And there's a few other places that things could happen more quickly.
One thing we're trying to understand is how the movie industry could be really permanently changed by coronavirus and the resulting impacts of it. And one thing I'm curious about is this idea of simultaneous release between at home, when movies are released at home and also in theaters, or even shortening the window between when movies are released in theaters and then available on demand. This has been a big debate between AMC and Universal. Where do you stand on this? Do you want to be able to do simultaneous release?
No. We think that the theatrical release is vitally important to the film industry and to generating the most revenue and profit. We just have not seen models where that kind of release schedule will benefit the profitability and the efficacy of major productions. We haven't seen a way forward that could work. So, look, we are completely committed to the theatrical business at this point.
Certainly a fascinating time, and we'll have to see when that theatrical business does come back. Tony Vinciquerra, thank you so much for talking to us, and we hope you'll be back to talk to us again. Kelly, back over to you.
Absolutely, Julia. Thank you for your time.
My thanks to both of you as well. Tony Vinciquerra, the CEO of Sony Pictures Entertainment, and our own Julia Borston. Coming up, we're sticking with entertainment. Goldman Sachs making a big call on the music industry. We'll have the details and which names will benefit next. As we head to break, take a look at the Internet ETF, the FDN. Another all-time high today, up 51% from its March low, led by the likes of Facebook, Expedia, DocuSign, and Twitter. We're back after this.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest editions.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Wanna bet football can make you feel nostalgic?
Playing days are over, so...
On the podcast, NFL Alumni Lounge, Charlie Booth sits down with retired NFL legends to talk about their careers, life after football, and everything in between.
Mr. Darren Waller, good to have you.
Yes, sir, it's good to be here.
Dana White, welcome to the Alumni Lounge.
Thanks for having me, brother.
Big member of our NFL alumni family, the CEO of the XFL, Mr. Oliver Luck.
Charlie, good to see you. Thanks for having me.
We're here with the president, Mr. Eric Price. Good to see you.
Search NFL Alumni Lounge on TuneIn to listen.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
Not all heroes wear capes, but most wear tights. Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis of the latest wrestling storylines, turn on the WWE podcast.
Welcome back to The Exchange. Well, the show must go on eventually, according to Goldman Sachs. They're making a bullish call on the music industry today, saying despite a 25% drop in global music revenue and a 75% drop in live events because of coronavirus, this industry will bounce back over the next couple of years. Goldman sees up to $142 billion in revenues, which is 4 times last year's number by the end of the decade. This due to secular growth of paid streaming, demand for content, new licensing opportunities, and positive regulatory developments. The analyst said record companies like like Universal and Sony will be big winners, but streaming platforms will also benefit. They prefer Spotify and Tencent in that space. Spotify, though, is still hedging its bets on the music industry, striking a $100 million deal with the Joe Rogan podcast for exclusive rights to the massively popular Joe Rogan Experience. The shares spiked on that announcement yesterday and are continuing to climb today. They're up another 7% to hit an all-time high. Still ahead, some positive news out of the airlines over the past few days. United, Delta, and Southwest all saying there's been a slight uptick in demand. Does this mark a real turning point for the industry? And can the stocks recover their previous highs? A bull-bear debate is next. And we're less than 10 minutes away from the Fed's April minutes. That's coming up in Power Lunch. Stay with us. We're back in 2.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
The Woj Pod with Adrian Wojnarowski.
Doris, you had reason to believe that you needed to get a test for the coronavirus.
Right. Well, let's just start with the headline, which is I did test positive for COVID-19. I was so tired from Saturday the 14th through Tuesday, March 17th.
You truly transformative sleep. So no more tossing and turning or trouble falling asleep. Because only Tempur-Pedic uses proprietary Tempur material that continuously adapts and responds to your body to relieve pressure. So you get deep, uninterrupted sleep all night, every night. The Tempur-Pedic Summer of Sleep starts now with all Tempur-Pedic mattresses on sale and savings up to $500 on adjustable sets.
Itchy skin distracting you? Cortisone 10. Maximum strength itch relief without a prescription. Cortisone 10. I'm out of clubs. And try new Cortisone 10 overnight itch relief. Good night itch.
Now more than ever, you need to know if your credit card companies and banks offer emergency financial assistance. Head to cnbc.com/select for the latest on relief for loans, mortgages, deferments, and more. CNBC Select, the stories you need for the smartest way to handle your credit.
Memorial Day weekend is normally the start of a busy travel season for the airlines, but not this year. The new CEO of United joined Squawk Box this morning with his thoughts on when demand will return.
Obviously, while we're in the worst financial crisis in the history of aviation, the opportunity to get through to the other side is really bright. And while it's too early to, say we see the light at the end of the tunnel yet, it's certainly a lot less dark in here than it was a few months ago. We don't know what demand will be in the fourth quarter and the first quarter. No one knows what the recovery is going to look like.
And United is one of the worst airline stocks this year, underperforming its peers by more than 70%. For more, I'm joined by Brandon Oglenski. He's airline analyst at Barclays, and Joe DeNardi is the airline analyst at Stifel. It's nice to have you both here. Brandon, let me start with you and where you think the airline sector can start to price in the kind of recovery that we're seeing in other parts of the stock market.
Yeah, well, good afternoon, Kelly, and thanks for having us back on again. Look, I know everyone's excited here when we hear, news about vaccines or people getting back to traveling. And I know Southwest and a few others have said, hey, look, we're coming off the bottom. Maybe revenue's not down 95. It's only down, 90 to 85%. But the big issue here is really not what's going to happen in the next few quarters, but where does travel demand go in 2021? And the best that we can guess is really probably down 20% from where we were in 2019. And maybe that doesn't even happen as fast as next year because we need to have places to go to. I mean, restaurants at 50% capacity, wearing a face mask at Disney, are these things that are going to be really fun that you want to spend a lot of money, with your family to go travel to. And more importantly, if we're going to put restrictions, like some carriers have said, we're not going to, book the middle seat, then airfare is going to have to go up in the midst of a lot of unemployment here. So I get it. I know people want to play the recovery. These airline stocks are down 50 to 60%, but you have to look at the debt balance here. Americans going to come out of this, if they survive, with conservatively probably $35 billion of debt. Delta United somewhere around $20 billion. Don't forget pension liabilities are going to approach $10 billion for some of these companies as well. And if you look at historical valuations and most likely compressed earnings next year, the valuations are already kind of there.
One of the debates, Joe, that we've been having and kind of hearing different points of view on is whether the airlines are going to see consolidation, bankruptcies. I mean, what the options really are here, because as our Phil LeBeau said, it's unlikely that regulators would want us to go from 4 major airlines to fewer than that right now. So where does that leave everybody?
Yeah, I think it depends on the extent to which the revenue environment comes back. If you end up with just a structurally reduced revenue environment because corporate travelers aren't flying as much, then I think you're going to need consolidation. This was an industry with relatively thin profit margins to begin with and a lot of capital intensity. So you can't assume that if revenues end up being 70% of what they were for a multi-year period, that there won't be consolidation. There pretty much has to be. And I think it really depends on how quickly pricing and demand comes back in fourth quarter. The issue is, I think, a lot less about liquidity and when American, to a lesser extent United, just says kind of the hole that we've dug is too deep, even if we raise additional capital, because they can raise a ton of cash against their loyalty programs. But you would emerge from that essentially competitively disadvantaged to a Southwest. And so I think that's really what we're worried about, what makes American and United, to a lesser extent, kind of uninvestable at this point is if the revenue environment takes longer to come back, at some point the board may say, we can raise additional cash, but what's the point?
Right.
We need to start over.
So I want to sneak in one more to each of you real quickly here. So, Joe, that being said, who could consolidate?
Yeah, well, Southwest has the liquidity, the firepower, and probably the political capital to be a consolidator. So if you look at their network, the two holes in the network are in the Pacific Northwest and in the New York area.
Mm-hmm. JetBlue and Alaska. Yep.
Right.
Okay.
Right. And then I think beyond that, it would be, the others, Delta, any other airline that was in a financial position to consolidate would try and find a partner.
Okay. And Joe, I know you had talked when we were talking about the Boeing MAX crisis about how Southwest might need to do something strategic. It could certainly do that for a lot less now. So real quickly, Brandon, back to you then. And both of you have been extremely cautious about investing in the airlines, citing these massive debt loads. So what happens next? I mean, what are the other alternatives? What's going to happen to the industry?
Well, I would take it even a step further. I mean, Southwest, I got to hand it to them. They run the best airline probably in the world, and they ran it with no debt, very modest, investments over the years. And that's really playing true now because we actually think they could get to the other side of this. So we do get some travel demand back, by next year with almost no net debt. And they're going to be in the driver's seat potentially even to take load factors down, take fares down, and, make some competitive pressures even without industry M&A. So this is going to be a pretty difficult landscape with a carrier that has no debt, and then like an American that's going to come out of this with $35 billion.
That's unbelievable. I know exactly what you're saying. No net debt versus some of those incredible loads. Thank you both. Very illuminating. Brandon Oglensky and Joe DeNardi talking about maybe what not to do in the airline space. That does it for the exchange today. The Fed minutes are here now. Let's get over to Power Lunch. Tyler Matheson.
All right, Kelly, thank you very much. And we'll see you back here at Power Lunch in just a moment. Welcome, folks, to Power Lunch, to the kitchen. I'm Tyler Matheson. Stocks are snapping back after yesterday's late-day sell-off. The Dow now back into positive territory for the month of May, joining the S&P and NASDAQ in that category. Now, the market volatility this week partially fueled by dueling headlines over Moderna's possible vaccine for coronavirus. The founder and chairman of Moderna will join us on the timing of their recent trial data and their stock sale this week. But first, we are just getting the minutes from the last Federal Reserve meeting. It was a major one, consequential. Steve Bleesman digging through that release right now. We'll give him some time to digest and dig. We'll hear from him in a minute. Meantime, Kelly, back to you.
All right, Tyler, thanks. And we are awaiting the headlines from the Fed minutes. Stocks are in rally mode right now as all 50 states have now eased lockdown restrictions in some way. Let's get over to Bob Bassani, who has more on the markets for us. Bob?
And dying to hear more about what Mr. Powell's saying in the Fed minutes. Remember, Mr. Powell's been much more aggressive talking about the need for more fiscal stimulus. I'm sure that'll come up in the minutes, so stay tuned for Steve on that. I've been talking about broadening in the markets, and it's continuing. We're not far from the highs for the day, but what you want to see happening, the broadening, it's happening again today. So the banks are up. The transports are up. We're seeing moves up in the Russell 2000, the small cap stocks, energy, materials. These were all laggards, and now the last day, today and Monday, they're leadership groups. That's what I call broadening here. So where are we in the market internals? Let me just show you here. Breadth, that's the advanced decline line every day. How many more stocks are advancing? It's improving. It's getting better. Volatility is declining. The VIX is below 30. Credit's been expanding. There's oceans of liquidity and new corporate debt out there. Market multiple, it's expensive. 23 times forward earnings. You can argue the market may be a little pricey, but certainly that's understandable given the rallies that we've had. One other thing I want to mention, China stocks are a little bit on the weak side today. You know, the Senate passed legislation just a little while ago that could ban a lot of Chinese companies from the U.S. For listings. So that's a very important development here. This whole China debate is heating up. Nothing's happening in this House yet, but we'll see. Democrats control that. I don't know if they're going to oppose this. This may have a chance of passage here. So look at these big cap China tech stocks down a little bit. Luckin Coffee, by the way, China coffee company, just started trading again on the NASDAQ after being away for a couple of months as they admitted a lot of their revenues were fabricated. They're being delisted by NASDAQ, and they're challenging that. They want a hearing in front of NASDAQ. So I guess the point here, guys, is a lot of this China stuff gets very caught up in this whole debate on coronavirus and trade overall, and it's going to be a major issue. You're going to have a little fight going on in the House of Representatives of whether or not to pass this current bill. Guys, back to you.
All right, Bob, thank you very much. For now, for more market reaction in the bond market, let's get to Rick Santelli with the day's update. Hi, Rick.
Hi, Tyler, and I'm going to let Steve have all the specific headlines, but suffice it to say, a lot has changed since the last Fed meeting, and of course, the biggest effects in the Treasury market that I've witnessed so far today are not coming in right this second. They came in, well, about an hour ago. Look at an intraday of 2s, 10s, 30s. We'll roll those charts because you see the yields dropped right around 1 Eastern. That's when 20 billion 20 years price, and it was a very good auction, even though we don't have any history on it because it hasn't been around since Back to the Future was at the movie's first run. What we can do is we could look at, the last 10 or 20, 10-year and 30-year auctions and kind of blend those results is what I did. And what really jumped out at me is that you had over 2.5 times oversubscription to this 20-year. So 20 billion, over 50 billion was thrown in to buy those 20 billion, and that is a solid demand scenario. Finally, those yields got down, so they were 138 and 30, 66 and 10s. You can see they've come back just a little bit. And finally, the dollar index. If you look at a couple of week chart of the dollar index, it is definitely giving up some ground under 99.5. That was solid support. So you really want to keep a very close eye on how the dollar moves, because if interest rates are meant to go down a bit from here, I would suspect that the dollar index should follow. Tyler, back to you.
I'll pick it up, Rickster. Thank you. We want to get right to Steve Leisman with the headlines from the Fed's last meeting. Steve?
Hi, thanks very much. Yeah, the Federal Reserve minutes are out from the recent meeting. They're saying that coronavirus caused tremendous human and economic hardship in the U.S. and around the world. They're concerned the virus will weigh heavily on economic activity. All of that we knew, but they did discuss some additional measures they could take. The committee could provide more explicit forward guidance at future meetings. That's been an issue that's been discussed. It could be either date-based or it could be outcome-based. In other words, based upon GDP hitting a certain level or a certain amount of time for how low interest rates would be. They could also provide additional detail on Treasury and mortgage-backed security purchases or plans to buy in, and they did discuss doing additional quantitative easing. Finally, and this is a bit of the bombshell, but just be careful because they didn't decide on this, they did discuss capping rates at specified levels, capping rates in the short and medium-term markets at specified levels for a certain amount of time. It's been something that's been out there as to whether or not the Fed might discuss this, either targeting the yield curve or actually targeting rates. If Rick hasn't fallen down, you may want to ask him about this. He might be on the floor right now, but that is something that they've discussed in terms of additional potential tools they could have, but again, not decided, guys. So I'm going to go back in and read some more of this unless you have some questions. But you could see clearly the Fed discussing the things it had in place at the time, the plans to implement those, and then what further it can do. And this really meshes with what Powell has been saying about his thinking about the need to plan for doing more than doing less, and even going beyond what's already been out there and proposed. Tyler?
Steve, let me ask you a question. Capping rates, what does that mean in practice, and what would that mean to the bond market or the equity markets?
Well, you'd have to ask somebody a little bit older than I am. I think it was the 1950s that there was an interest rate cap. I'm going to search that word and find that section again. Okay, so I'm going to read you directly what it says here. A few participants, no, it's a few, it's not the majority of the committee, also noted that the balance sheet could be used to reinforce the committee's forward guidance regarding the path of the funds rate through purchases of Treasury securities on a scale necessary, here's the part, to keep Treasury yields at short to medium-term maturities capped at specified levels for a period of time. I guess the Fed would say the interest rate on the 2-year shall be 1.5%, or I guess it'd be much lower than that, 0.5% or 0.2%, I guess where it is now. And we will buy and sell securities such that we would keep that there. Now, the thing about the Fed is they often don't have to actually do anything. They can set things to a certain cap, and the market kind of magically adjusts there. But that's the way it would do it. It would, I guess, conduct open market operations around a specific maturity or maturities that would keep the rate at a certain place. And this would allow it to have more of an impact on the economy. For example, targeting the 5-year is a place where a lot of business loans are targeted off of, so they could keep that rate down if they needed to.
Very interesting, and certainly that would be a major escalation of the Fed's involvement in the economy more broadly. Steve Leisman, thank you. We'll give you more time to read through, and we'll talk a little bit later, I bet. For more, let's bring in David Rosenberg. He's chief economist for Rosenberg Research, and Craig Columbus, CEO of Columbus Macro. Welcome to both of you. David, let me begin with you. You're a skeptic of this market for, among other reasons, the idea that you think the market is overly optimistic and major business executives aren't.
Well, I think that's exactly the dichotomy is that, we have business activity plunging. I don't see that even with the reopening of the economy. As we're seeing in China, you can reopen the economy, but the demand side is lagging well behind. I mean, the social distancing is going to be with us until we get a vaccine. And that is going to hold back whatever recovery we're going to be seeing after this initial detonation. But I guess you can call me skeptical. It's just more an understanding that, let's call it for what it is. This is not really a stock market that is hinged to the economy. In fact, there's no more correlation between the SPX and the GDP. The Fed has broken that down. This is strictly and purely a liquidity-driven rally that we're seeing right now. And so it's easily understandable. You go back to last October, we're back to the S&P 500, back to where we were last October. Last October, the unemployment was 3.6%. Here we are at 14.7%, at the same level of the stock market. Is rather unbelievable, because I don't think anybody would have believed that could happen. But again, it is, when they say don't fight the Fed, that is not just a glib refrain. We're actually living it in the moment right now.
And you see this as the Fed injecting liquidity, I would just say adrenaline, steroids into the marketplace, right?
Well, it's, look, the money supply numbers are surreal. You've got M2 growth north of 20%, M1 north of 30%. We've already taken out the peak levels of money supply growth we had in the 1970s. When we were watching Happy Days and playing Trivial Pursuit, it's amazing to me how gold hasn't broken out to new highs, but I'm sure that's going to happen. But there's no question that the monetary largesse, the rapid expansion, the Fed's balance sheet has overtaken the economy and corporate earnings as the major source of correlation with the equity market. So that's really what's happening here. And, when the Fed moved to the high yield market, the questions I kept on asking, especially now that Powell's saying, well, we're going to have more to do. Once you move to a part of the capital structure that resides next to the equity market, people believe that they're going to start to buy equities.
All right, Chris Columbus. Let's bring you in. I mean, Craig Columbus. Chris Columbus. You are an explorer, Craig. I know that. Let's get your reaction to what David just said. Your market thoughts and your economic thoughts in light of what the Fed is doing and what the Fed said in its minutes.
I agree with a lot that he did say, in the sense that two things the Fed can't fix, right? Liquidity can't fix solvency. You can't take good debt and turn it into bad. And the second thing, and it's true all around the world, is how do you refire consumption? Because it's not just in the sense of income replacement, meaning you get the transfer payments to the people that need it, but you have to have confidence in your safety. And the problem I see is the country is so divided, even on the threat of the virus itself. So really, to have a very sustainable recovery, you need behavior to all fire in the same direction. You need behavior to converge. Now, as far as the market, it's not entirely irrational in the sense, though, that if you think about tech, healthcare, communication services, over 50% of the S&P 500. So those sectors benefit from the transformation in our world. Their business models benefit from telework, digitization, wellness. And so the fact that those are also tech and healthcare, the sectors that have the lowest leverage. They're the two least leveraged, so you need cash. And the last thing I would say is, remember as an investor, some of these same themes, these growth themes that may be expensive in the U.S., you can access outside the United States as well.
All
Kelly?
right. Let me bring in Steve Leisman here. He's got a few more headlines from the Fed, Steve, including the fact that they have expressed concern about the possibility of secondary outbreaks of the virus and that may cause businesses to be reluctant for some time to engage in new projects, rehire workers, or make new capital expenditures.
Exactly, Kelly. And you'll recall we first heard Fed Chair Jay Powell discuss this concern about the second wave, most explicitly last Wednesday at the Peterson Institute, and just a couple other areas of concern that I think reflects the issues that we've heard about the Fed being more pessimistic. They're saying participants are concerned that some business models, quote, may no longer be viable if consumer behavior changes. They're saying small business is not able to embrace an extended financial, may not be able to endure an extended financial shock. And finally, they are concerned, as you said, about that second wave. There was some discussion of a better case scenario, Kelly, of maybe this thing ending more quickly and consumers returning more quickly as well. But there were also several really pessimistic views and concern that the Fed needs to brace itself and its policies for those outcomes.
Steve, it's interesting at the time we're talking about kind of a V-shaped rebound in the markets and in mortgage applications and this kind of thing. We're still talking about the Fed doing more, not less.
Yeah, for sure. I mean, what I have gleaned from talking to several Fed officials and listening to all their public presentations, Kelly, is that they believe that this is all the reopening could be premature in that they keep calling for additional testing. They keep calling for really having the kind of systems in place to get consumer confidence. That's really a big concern they have out there, is that even if you open it, David Rosenberg is really saying very much the same thing. Consumers may not come because you don't have the systems in place to make them confident. So they're concerned that, yeah, you reopen it, you have some rebound, but that it takes more to get back to where we were before.
Yeah. Steve, thanks for bringing us all those headlines. Pretty spicy for the Fed minutes, all things considered. Tyler.
And our thanks to David Rosenberg and Craig Columbus. Craig, if we had Christopher Columbus here, we'd really have had something. We appreciate your time today, guys. Kelly, back to you.
Coming up, we're going to have more on today's market rally. Check out two beaten down sectors, energy and financials. They are leading today's snapback with gains of 2 to 3%. Plus, the race for a vaccine is heating up. Moderna causing waves over its recent trial data and sparking some confusion on Wall Street. The founder and chairman is going to join us to clarify some of that right after this break. Stay with us.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then, whenever you want to browse your favorites, you'll find everything under the Favorites tab.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen. With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With Game Replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunnin to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
The Mina Kimes Show podcast.
Kevin Clark.
If Josh Allen became the 10th best quarterback in football this year, they'd probably win 14 games. Am I wrong about that?
No. If you as a quarterback can't win in the Bills' situation right now, they should not extend you. So many teams, Jets, do not have the information they need to evaluate their quarterbacks based on the teams they built around them. The Bills do.
Listen and subscribe to the Mina Kimes Show podcast.
Search the Mina Kimes Show to listen.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
stand out stations and podcasts. Stay in touch with TuneIn.
Hit the court anytime with these.
Welcome back, everybody. Moderna is at the center of controversy this week over its coronavirus vaccine, causing some market whiplash, as you're probably aware. In just a few moments, we will be joined by the chairman of that company. But first, let's go to Meg Terrell for more on this very intriguing story. Hi, Meg.
Hi, Tyler. Well, let's just walk through some of the events of just the last week. It was on Friday when during a press conference in the Rose Garden at the White House, when the president was introducing Operation Warp Speed, focused on a vaccine, that he introduced Moncef Slaoui, who happened to be a member of Moderna's board. Moderna announced essentially at the same time that he was stepping down from the board. But just around the same time, Dr. Slaoui made some comments saying that he had seen some very early clinical trial data on a potential vaccine, and he didn't say which one, that made him even more confident that the goal of having vaccine by the end of the year was possible. So lots of speculation, of course, began that he was talking about Moderna's vaccine. And indeed, Monday morning at 7:30, Moderna reported interim phase 1 data from its trial of a potential COVID-19 vaccine. And those data, while very early, drove the stock up to close 20% higher that day. After the close of market, Moderna announced it was selling $1.25 billion worth of stock and said it planned to primarily use those funds to fund the manufacture and distribution of the COVID-19 vaccine if they're successful. Finally, yesterday, there was a report from Stat News that really rattled both Moderna's stock and the entire market, citing experts saying that there's just not enough data to determine whether this vaccine is effective based on what Moderna reported. And guys, a lot of speculation about why Moderna reported those results Monday morning, including from Scott Gottlieb on Squawk Box this morning, who speculated it might be because Dr. Slaoui alluded to them on Friday, and Moderna needed to then report the results Monday morning. Well, we've got a lot of questions, and the best person to give us answers is somebody from Moderna, the chairman, Noubar Afeyan, and he joins us now. He's also the co-founder of Moderna and the CEO of Flagship Pioneering. Noubar, it's great to have you. Why don't we start with that question? Monday morning, you had interim data and only 8 patients worth of data that people are really focusing on who generated neutralizing antibody data. Why Monday morning for that data release?
Hi, Meg. Thanks for having me on. So the company is, as a public company, constantly monitoring when it has information that it deems material to share with the public. And that determination was made over the weekend that we should do so on Monday morning. And so we reported interim results that were generated with our collaborators at NIAID, which is part of the NIH. And what we put out was the extent of the data that we had available. It reported on antibodies across 45 subjects that were tested, all of which produced antibodies, and a subset, 8, 4 groups in 2 cohorts, all of whom had developed neutralizing antibodies. That's the data we had. That's the data we shared.
So I want to ask you about, that's the data you had, because one of the people quoted in the Stat News story was a Yale vaccine researcher, Jack Rose, who said, quote, "My guess is that the numbers are marginal, or they would say more." Did you have more information and only report what looked good? Did you have numbers that were marginal, as this person suggests?
Meg, look, Moderna is a company that is not only trying to develop 15 different drugs and vaccines, but also has engaged in a public health crisis, like many other major pharmaceutical companies. We take what we do very seriously. We would not have put out only some of the data to make anything look any different than the reality. And in fact, more importantly, not only is our scientific credibility very important to us, but the NIAID and the NIH, I think, whose credibility cannot be challenged by any experts or researchers, has had every ability and contributed to how we said what we said and the extent that we said, because of the fact that they are ultimately responsible for publishing this data, presenting this data in its full, which we expect to happen in sometime soon. So I think we recognize that there's so much attention on this matter that there are many folks who are professing expertise and guessing on what we may or may not have. That's not very useful to a world that is looking for some news that they can interpret, only because as a public company, it's very difficult for us to respond to expert guesses as to what we do and don't have. And so I would simply urge the public to pay attention to what we say. We stand by what we say. And as more is said, I think that some of these guesses will be clarified for what they are.
Nubar, it's Kelly here back in the studio. What most people who I've spoken to are focused on is not so much just the results of that study, but the timing of the stock sale that evening and the fact that the CEO has been a consistent seller of Moderna stock. Is there a reason why he's not been more of a buyer of Moderna? And the timing seems explicitly tied to the fact that the shares jumped in value, which is fine. I mean, that's the whole point. And obviously the whole market is excited by the prospect of this being a cure. But should investors in Moderna expect more of this, that any positive announcements will be followed by more stock issuance? And what should they make of the CEO's behavior?
You packed several questions into one. Let me see if I can address them in the brief time that we have. First, the timing of the stock sale was a function of the data and what it suggested to us as a company and the urgency we felt based on the data that we had to move even more quickly than we have been moving already. Moderna is a recently public company, and the resources that we have so far deployed towards this have been measured. Certainly, we've had some assistance from government funding through BARDA, but we felt as a company, following obtaining the results, which just occurred, that it was prudent for us to add to our resources and invest directly from our balance sheet into accelerating the preparedness we have to be able to produce large volumes of the vaccine. Look, the reality is that we don't yet know if we will be able to show a safe, effective vaccine that can be licensed for distribution. But the day that we do, we're going to wish that 6 months earlier we had made the very investments we've sought the resources to be able to make. So we feel a sense of urgency and obligation to do this. That's why we did it. As for your questions around stock sales, look, there's a background context. The biotech industry has hundreds of companies, and many of the management teams, including ours, have programmed selling that occurs periodically. All of it is disclosed, and there's nothing unusual that has gone on. And tying these things to each other, I think, is fine to do, but they have really nothing to do with each other. The reality is the company sought resources to be able to respond to the obligation and opportunity it sees, and we hope that it will be we will be vindicated in having made that decision.
Nubar, it's Meg Terrell again. In the short time we have left, I just want to ask you about Moderna's approach to whether the company or any company working on a treatment or vaccine for this pandemic should make a profit off of it. Bigger companies like Johnson & Johnson have said this is a non-profit endeavor for them. Gilead is donating the first set of doses of its remdesivir. Pfizer has said it's not necessarily a money-making endeavor, but Moderna is a smaller company, and this would be your first product to make it to market. Do you believe and do you expect, if it's successful, you will make a profit?
Meg, look, we have not commented on this because everything we've been doing has been to, as rapidly and as safely, complete the only race that matters, which is a race against this virus. Look, a lot is said, and I'll answer your question, but a lot's being said around who's going to win a race and how many entrants there are. Apparently there's 100 vaccine makers, 8-10 of them are now in the clinic. As far as we're concerned, we've consistently said that we are racing in our own lane. We want to finish the race in our own lane, and if we get over the finish line, the only thing we want to do is deliver the quantity of vaccine that we're able to produce. That's our entire focus. So we are not thinking about a profit as a motivation here. Certainly, as a company, we will look at the value of what we're doing and try to actually reflect that in what we do. But we recognize this is a pandemic. This is a very urgent situation. And like others, we're focused on getting the vaccine made and not on a profit motive for doing so. That's as far as we're able to comment today. There's a lot of unknowns out there. By the way, this is a U.S. issue. This is a worldwide issue. We are looking and making plans to prepare to produce the vaccine for worldwide distribution, and we're working with many partners to be able to do that. That's our current focus.
Well, and I know you've put that goal out there for 1 billion doses per year potentially, but your chief medical officer, Tal Zaks, also said on Monday that at the beginning, the demand is going to be greater than the supply. How much do you expect to have at the beginning, and who's going to get those doses?
We are increasing that number as we speak by virtue of the resources that we've obtained. We are also hoping and looking forward to additional resources as we go forward in order to be able to get to that billion dose per year number. It will be a heroic effort, and it will be a collaborative effort between governments, other private entities, whether they're foundations or companies, and ourselves and our shareholders, first and foremost, who believe that this is something that we really need to be able to do. Look, I heard what Tal said, and he's not only right at the beginning, he'll be right at the end, in the sense that I think no matter how many of these vaccines actually make it over the finish line, we will still be constrained by the supply. A lot of numbers are being thrown out, but these are just estimates. In terms of who will get this, we will work with the authorities and the governments that we're collaborating with to be able to make sure that the vaccine is appropriately distributed. As a company, as a private sector player, we very much rely on the public health authorities and our collaborators at NIH and NIAID, as well as other agencies, to guide us in that. And from day one, I think that Dr. Fauci, who's collaborated with us, and many others at BARDA and elsewhere, know that this is a company that takes its responsibility seriously and recognizes that there's some things we can do well: design, develop, test, and communicate results. And there's something that is beyond what the company can do, and that pertains to who gets it in what order. We will make as much supply as possible, as humanly possible, safely available, and then it will be up to our collaborators.
Well, Nubar, we really appreciate you being here with us today. And of course, we hope that the vaccine development goes well in the further stages that are required to prove that it works, and of course, that it's safe. Thanks for being here. Kelly, back to you.
Thank you for having me.
All right, thanks as well. And to you, Meg, for that. Meg Terrell with the chairman of Moderna. Coming up, we're going to have much more on today's market rally. Look at some of the stocks hitting new highs. Facebook is now about 6%. Amazon, 1.5%, all-time highs. Chipotle, well over $1,000 now. And PayPal as well. The stay-at-home stocks are surging even as America begins to reopen. But Wall Street says some of these names have run too far, too fast. We'll dig into all of this after this short break.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then, whenever you want to browse your favorites, you'll find everything under the Favorites tab.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Connor to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening. While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history.
There it goes, 3-2 pitches, hit in the air and hit well. Center field, Bader back, at the wall, it's gone!
Search Classic Game Replays to relive some of the great contests in America's pastime.
Ground ball out to Jackie Robinson, up with it over to Reese for one, back to Hodges, it gets away from him, Barras trying to go to second.
It's on demand, it's free, and it's only on TuneIn.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying
to stand out stations and podcasts. Stay in touch with TuneIn.
Welcome back. Here's a check on markets today, which are rallying across the board. About 1.5% gains for everybody. That's the S&P 500 right in the middle there with a 44-point increase. Dow, S&P, NASDAQ all mostly recovering from yesterday's declines. And oil is one of the strongest parts of the market, energy that is. The oil commodity itself, WTI, closing up about 4% to $33.53 a barrel. It's a pretty impressive move off the bottom. We had signs today of improving demand and a surprise drawdown in inventories. And yes, the stocks, the energy sector is the top performing sector in the markets right now. Tyler?
Well, Kelly, let's go over to Sue Herrera for the latest on the coronavirus. Hi, Sue.
Hello, Ty. Hello, everyone. Here's what's happening at this hour. Alabama, North Dakota, and South Carolina are the first states to say that they will use tracing technology from Apple and Google in apps meant to slow the spread of the coronavirus. You can get more at CNBC.com on how states plan to do contact tracing. 106,000 new cases of COVID-19 have been diagnosed, according to the World Health Organization, over the last day. That is the most for any day since the outbreak began. WHO officials also say an end to U.S. funding would have, quote, major implications for its efforts to deliver health services around the world. And a little bit of encouraging news for those who hope that you can only get COVID-19 once. Researchers in Boston infected 9 monkeys with the coronavirus. All of them recovered and developed antibodies that gave them protection from reinfection. The results are also promising for vaccines and their ability to provide immunity from the coronavirus. As always, Ty, you're up to date. I'll send it back to you.
Well, I'm glad the monkeys are doing well, and
there's
some promising news there. Sue, thank you very much. And now it's time for Trading Nation, and look who gets to do it today. Me. We're looking at some of the COVID-19 plays. Why not? BTIG warning this week of vulnerability in stocks, including Grubhub, Farfetch, Chewy, and Etsy. And then there's the video conferencing stock Zoom, a name up 155% just this year. And now with a larger market cap than 75% of the S&P 500. Let's bring in Matt Maley of Miller Tabak and Mark Tepper. He is with Strategic Wealth Partners to discuss. Matt, what do you think of these stocks as a group? And are there ones that you would separate out specifically as being winners and others sinners?
Yeah, I do think that a lot of them are getting a little ahead of themselves, and the ones that BTIG mentioned are definitely in that group. And the one that stands out to me is Zoom. I mean, it's a great product. I never used it before this year. Now I use it all the time. But it not only has it gone up 150%, it's it's got a PE now above 300, well above 300. But more importantly, this market is so dependent on momentum right now, and this is a stock that looks like it has good momentum, but the quality of that momentum is starting to wane. Let me explain. You look at the chart on the stock, and even though it's made a series of higher highs, its MACD chart, and that looks at the moving averages, very short-term moving averages rather than the 50 and 200-day, but it's rolled over a couple of times, and as the stock's made new highs, it's made lower lows. So it shows that momentum really isn't there like it was a month or two ago. I'd also mention, which I didn't put in the chart, and I apologize, but the last rally's come on much lower volume. So when you look like a stock that Kelly just mentioned, Facebook, which is breaking out today to new all-time highs on big volume, that quality of momentum is still there, where it's really not there for some of these other names. So you want to be a little bit more choosy.
Mark, what are your thoughts?
So I agree. I think a lot of these names that have been high flyers lately, they're going to give back some of their gains when people start leaving their homes again. However, I think there's a group of specific companies where I think they're set up to really realize sustainable stock price rises. And I think two examples would be Dollar General and O'Reilly. So obviously, I mean, we all hope COVID goes away as quickly as possible. But unfortunately, the byproducts of the virus, those are here to stay. So job destruction, high unemployment. Dollar General is your typical trade down stock. When times get bad, their business ramps up. 78% of the revenues come from consumables, and 80% of the stimulus money that was recently sent to families has gone towards grocery stores. And then there's more talk of that to come. With O'Reilly, we like O'Reilly because we think this is going to be the year of the road trip. No one's flying, gas is cheap, so people are going to put extra miles on their car. The problem is our cars are the oldest they've ever been. They need to be fixed, and O'Reilly's the answer there. So we like both of those. We think they're going to be good during COVID, but also post-COVID.
I'm with you on the idea that this is going to be a driving summertime for many, many people who are going on vacation, and maybe an RV summertime for a lot of them. Matt and Mark, thank you very much. And for more Trading Nation, you can head to our website or follow us on Twitter at Trading Nation. Kelly.
All right, Tyler, thanks. Still ahead, the coronavirus crisis is hitting every corner of America, and one expert says it could lead to the demise of rural America. He'll join us to make his case next. Plus, our Day 3 crisis playbook, we're going to look at how restaurant stocks could be benefiting from the delivery boom and which ones. Remember, you can always watch or listen to us live on the go on the CNBC app. We're back in 2.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
During bull markets, many traders find themselves attracted to small cap stocks because they have a tendency to have a higher beta, meaning they generally move up faster than the broader market. But don't overdo it on the small caps because they're also more vulnerable to pullbacks. I'm Joanna Payne, and Schwab is the better place.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Want Want to bet football can make you feel nostalgic?
Playing days are over, so...
On the podcast, NFL Alumni Lounge, Charlie Booth sits down with retired NFL legends to talk about their careers, life after football, and everything in between.
Mr. Darren Waller, good to have you.
Yes, sir. It's good to be here.
Dana White, welcome to the Alumni Lounge.
Thanks for having me, brother.
Big member of our NFL alumni family, the CEO of the XFL, Mr. Oliver Luck.
Charlie, good to see you. Thanks for having me.
We're here with the president, Mr. Eric Price. Good to see you.
Search NFL Alumni Lounge on TuneIn to listen.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there are unique circumstances, and we're trying
to standout stations and podcasts. Stay in touch with TuneIn.
The Mina Kimes Show podcast.
Kevin Clark.
If Josh Allen became the 10th best quarterback in football this year, they'd probably win 14 games. Am I wrong about that?
No. If you as a quarterback can't win in the Bills' situation right now, they should not extend you. So many teams, Jets, do not have the information they need to evaluate their quarterbacks based on the teams they built around them. The Bills do.
Listen and subscribe to the Mina Kimes Show podcast.
Search the Mina Kimes Show to listen.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Connor to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search classic game replays to start listening.
Today, for the first time, all 50 states have at least partially emerged from lockdown. But as we get back to work, who gets the blame if someone gets sick? Kayla Tausche's looking at that issue in our States of Play survey. Kayla.
Hey, Tyler, who shoulders that liability is one of the key questions facing lawmakers as they try to craft the next phase of congressional relief. But the answer isn't so clear-cut, according to our latest CNBC and Change Research survey conducted over the weekend in 6 critical battleground states. In that survey, 45% of respondents said that employees and customers should be able to sue a company if the virus spreads there. That's the position backed by Democrats. 42% of respondents said businesses should be protected from lawsuits over the spread of the virus. That's the position held by most Republicans. The rest of respondents say they're not quite sure who should be blamed. Of course, pinning the virus on a particular establishment would require large-scale contact tracing so that people's whereabouts can be accurately tracked. And Americans aren't completely sold on that idea quite yet. More voters in these swing states say they are not willing to share their data to allow their whereabouts to be tracked. 14% say that they are on the fence about that. Of course, most officials hope that if there is another future outbreak in some of these cities, that they happen in small clusters so that invasive technology isn't needed. But of course, we don't know whether or when any second wave would take place and how some of the data will look after these reopenings. Tyler and Kelly?
All right, Kayla, thanks very much. Kayla Tausche. As states reopen, our next guest is worried it's too soon and says it could lead to the demise of rural America. He points out areas around meatpacking plants in Iowa, for example, don't have the healthcare facilities and financial resources of larger cities if there were to be a further outbreak of COVID-19 cases. Here to explain is Benga Aguilori. He's senior economist at the Center for American Progress. And well, Benga, I have a couple of reasons for skepticism about this, not least of which is that the demise of rural America may be attenuated by work from home as more people are finally able to leave high-cost cities and maybe go to more of the inner parts of the country. But explain why you're so concerned about these areas and how much more at risk you think they are to coronavirus.
My biggest concern is the infrastructure issue. And so biggest part of it is the healthcare infrastructure, that there's no access to hospitals, things like that. So when a outbreak comes out, then they're not going to be able to tackle this virus. But then you bring up a good point about working from home. A lot of these rural communities don't even have the broadband infrastructure to do that. So even if people move out there, they're not going to be able to work from home. And so there's all these infrastructure issues that are going to cause problems.
Right. Although if there's enough of a demand, I mean, that could finally get the broadband infrastructure to expand, kind of following that demand. But let's go back back to the core issue about the spread of coronavirus. You mentioned Iowa, the meat packing plants and so forth, but every state that has reopened has so far seen a lower R0, a lower sort of spread of coronavirus than it had prior to the lockdowns. Do you see any evidence that that reopening is intensifying the spread of coronavirus in rural America?
Yeah, because when we talk about rural America, one thing we have to understand is that it's not a monolith, that Iowa, Georgia, Mississippi, even Central California, there's all these different parts of rural America. So you look at tribal communities in New Mexico, they're having huge outbreaks at the level of big cities. You look at Southwest Georgia, Mississippi, Alabama, they're also having huge outbreaks. So at a state level, it may look like that, it's actually getting lower, but we look even deeper and specifically focus on rural communities, it's actually getting worse.
Understood. And I know, listen, I grew up in a pretty rural community, so I definitely know what you mean about, healthcare support. Although I will add, even in that community, they've had basically no outbreaks or hospitalizations of coronavirus. But there's something else to balance this against, because I know that you're concerned about these reopenings and say we should even have a national shutdown again. The damage from that, including the death toll and the health toll, could be terrible for these rural communities. This is a population, as you know, that tends to be sicker, older, more vulnerable. We've already seen people having to postpone routine medical checkups, people who might have cancer or diabetes and chronic conditions not able to get the care they need. Isn't it more urgent that the economy reopens in order for them to get that care and to make sure that those jobs that support those communities don't go away?
I think this is a place where the policymakers can really step in and actually help out with these reopenings. So one of the things we have to think about is that, when we reopen, people may not come back because they may still be worried about the outbreak. And so we could reopen the economy, but people may not be able to come back. So policymakers put more money into relief programs to help out with businesses, to help out with people who are on layoff, because we have huge layoffs. We also have decrease in retail sales. And so policymakers can step up and make the environment much more safer.
All right. You can read more of Benga's piece of coronavirus, he says, may accelerate the demise of rural America. Thanks for joining us today. We appreciate it. Benga Aguilore. Tyler.
Thank you for having me.
All right, Kelly, thank you very much. Fascinating conversation there. Let's take a look at the market, shall we? Another rally underway right now, and the NASDAQ is just a few percentage points from all-time highs, if you can believe it. So take a look there. You see those numbers right in front of you. Up next, we'll take a look at some of the big movers on the day as Power Lunch continues after this.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history.
There it goes, 3-2 pitches, hit in the air and hit well. Center field, Bader back, at the wall, it's gone!
Search classic game replays to relive some of the great contests in America's pastime.
Ground ball out to Jackie Robinson, up with it, over to Reese for one, back to Hodges. It gets away from him. Ferris trying to go to second. Hodges.
It's on demand, it's free, and it's only on TuneIn.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
Looking for your daily fix of NFL news and analysis?
In that. So we had to blow it up and do Super Bowl predictions instead.
Look no further than the Pick Six podcast, where CBS sports writer Will Brinson gets you up to speed with what's trending in the NFL that day, so that you're always in the know.
Yeah, it's pretty revealing of Brinson's methodology for predictions. When he gets mad at people for predicting good teams are going to win the Super Bowl or good players are going to win major awards. That's how you wind up.
Search Pick 6 on TuneIn to listen app.
Time now for today's Power Movers, starting with Inovio Pharmaceuticals. That company says its virus vaccine showed an immune response in mice and guinea pigs. Harley-Davidson, they make hogs, shared higher after saying it is reopening plants and resuming production, albeit at lower rates. And we end with shares of Camping World, which have had a huge resurgence from the bottom, up 350% in 2 months and trading at levels not seen since the end of 2018. Kelly?
All right, Tyler, thanks. While many areas of the economy are still shut down, there is strong demand for workers in other parts of the economy. Rahel Solomon is joining us now with how companies are working together to meet the demand, maybe move some people around and keep them employed. Rahel?
Hi, Kelly. Yeah, so what we're witnessing is really one of the fastest reallocations of labor as some companies look to lay off millions. Others are scrambling to find workers. So what we're finding is that companies at both ends of the spectrum are actually working together to help the workers who are sort of caught in the middle, who have lost their jobs through no fault of their own. We know that Amazon, for example, has partnered with Hilton and others as it looks to hire 100,000 workers. Albertsons, for example, also worked with 35 businesses, including MGM Resorts, and hired 60,000 new part-time employees. Cisco telling me that it partnered with Kroger to provide its furloughed workers temporary work. And how about this example? CVS working with companies like retailer The Gap, Delta Airlines, some of the hotels like Hyatt and the Marriott, saying that they have 60,000 people either currently being considered, actually going through the process, or who have already been hired. And Kelly, consider this. They say they have had 1.3 million people apply for jobs in the past 2 months. So that certainly gives you a sense of what type of need is out there for these temporary work opportunities.
It's fascinating. Rahel, do you think these are workers who are going to go back to what they were originally doing, or do they sense that this could be my new job or company or industry for some time?
It's such an interesting point. So Cisco made it a point to confirm to me that those workers who are now temporarily working at Kroger, they're still Cisco employees and will remain to be so. It really depends. You might remember we did a story, I think, also on Power Lunch last week about that study out of Becker Friedman Institute that for every 10 layoffs caused by COVID-19, 3 jobs were created. So we'll have to see if some of these shifts become more permanent. But at least for certain partnerships and agreements, they want to make it very clear that those temporary employees are still very much their own. So we'll have to see what type of shift happens more permanently.
Yeah, no, I think it's a good sign. They say, hey, they're still our workers and we want them. You know, it's not, hey, good luck to you.
Exactly.
Rahel,
exactly.
Thanks very much.
And to that point, MGM Resorts said that they welcome their employees back with open arms when they finally can start to reopen. So it's a very good point, Kelly.
Yeah, it's a great sign. Rahel, thanks. Rahel Solomon. Tyler.
All right, Kel, thank you very much. Big split in the restaurant industry right now between those that deliver and just about everybody else. Shares of Chipotle up 80% in 2 months. Papa John's up 50%. Can those gains hold as more restaurants reopen? That is up next on Power Lunch.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunningham to Fiala, he scores!
For a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
All right, welcome back, everybody. It's day 3 of our crisis playbook, and today we're going to dig into restaurants and tell you about which ones to buy and avoid there. Start of the pandemic, these names were hard hit, all of the restaurants, but the boom in delivery and the promise of reopening is sending a lot of them much higher recently, with Chipotle actually hitting new highs today. And with us now to share her playbook, Nicole Miller-Reagan. She's an analyst at Piper Sandler. Nicole, welcome. Good to have you with us. The simple fact that separates today's winners from the losers is delivery and pickup, right?
Absolutely. You have to look for those brands that have the culture and the concept, unit level economics to deliver, but deliver in different channels.
Delivery in different towns, you say?
Delivery in different channels. So, everything off premise, rapid pickup is a great expansion. Digital in the form of deliveries is the most obvious and the one that's ticking up 2 to 3x. That's a very investable theme.
A lot of the big publicly traded chains are kind of quick serve food establishments. I guess you would say Darden is not necessarily that. It has more dine-in. How do you try and analyze the restaurants that are dine-in restaurants? We spoke yesterday with Tillman Fertitta. Most of his, he's not publicly traded, but most of his restaurants, whether it's Morton's or Chart House or Ocean Air, they're all sit-down places, and those are going to have a harder time coming back, right?
They are, but there's a difference that's really important to understand. So yes, we love limited service, and they have the best off-premise capabilities. But, for casual dining or full service, April was better, May is even better. And the distinguishing point would be those concepts you just mentioned at the very high end are tied to corporate spend, and that's going to come back much more slowly than the leisure check.
That's a great point, Nicole. It's Kelly here. I wanted to ask about delivery for all restaurants, which obviously is more important than ever. But my understanding is it's not great in terms of how it weighs on profitability. It's expensive. You're relying on third-party partners. How is that going to affect companies that now rely on this more than ever?
It's actually net neutral if you have scale, and that just means a global footprint, and if you are one step ahead. Anybody trying to do delivery now and catch up is still at the lower end of the spectrum of negative same-store sales. The other fact is the in-room dining, is your base margin. Any rapid pickup to go off-premise is actually better margin, and then delivery is slightly dilutive to margin. But as long as those two grow lockstep, net, you're going to get around the same margin.
Your favorites here are Chipotle, Wingstop, and Darden. Explain why and remind us who's in the Darden portfolio.
Absolutely. So Chipotle is our top pick, number 1, number 2, and number 3. The fact of the matter is they're exiting their recovery phase and they're going into global growth that will accelerate digital and units. Wingstop is an excellent franchise network, total white space, best comps in our coverage universe, also great culture and unit level economics. And Darden, that really comes down to scale and people. They hire the best of the best of the best. And Olive Garden and Longhorn will be here in the future. They will continue to take share.
All right. Nicole, thank you very much for being with us. Nicole Miller-Reagan. Kelly, back to you.
Let me just quickly draw everyone's attention to shares of Disney and SeaWorld, which are two of the companies apparently where we might be hearing as soon as Thursday about their plans to reopen. So Disney is up a little less than 4% right now, and SeaWorld, Tyler, is spiking a little less than 10%.
That would be a big talisman of what could be coming. And, of course, some of the shopping and dining areas at some of the Disney locations and Universal have changed. Kelly, great to be with you today.
And now over to the closing bell. Tyler, we'll see you tomorrow.
Tyler, Kelly, thank you both very much for that. Welcome to the closing bell. I'm Wilfred Frost alongside Sarah Eisen. Stocks back in rally mode. S&P 500 at 1.7%. Let's have a look at what's driving the action today. Hope for economic recovery as states continue to gradually reopen and Congress debates a stimulus extension. Decent demand for the Treasury's first 20-year bond issuance in decades, while Fed minutes show officials weighing an extraordinary amount of uncertainty in the economy. And the Nasdaq hit its highest levels in 3 months, with Facebook and Amazon all at all-time highs. The Nasdaq up by 2%, Sarah.
Ahead on today's show, fashion in the time of coronavirus. We'll speak to Anna Wintour about Vogue's new partnership with Amazon on a digital storefront to connect small and medium-sized designers with customers. Plus, we will speak to Truist CEO Kelly King about M&A in the financial sector and his bank's philanthropic efforts right now for coronavirus relief. Let's focus in on the big stories we are watching. 59 minutes left of trading. Mike Santoli tracking today's rally. Steve Leisman with the highlights from the Fed minutes just released in the last hour. And Cowen's Oliver Chen is with us to break down today's retail earnings and the big box name he likes the most right now. But Mike, we'll start it off with you and this market rally we're seeing. What stands out?
Yeah, Sarah, the market just bobbed right back up from that late day sell-off yesterday. In fact, the low for today in the S&P 500 hit about 3 or 4 times was yesterday's high. So it seems as if, big money investors continue to behave in a way that suggests they feel underexposed to stocks if they're not going to pull back a lot. And, we've been talking about this rotation theme. Today, it's kind of just shades of green. You have small caps up a lot, but also big tech and financial. So it's a fairly inclusive rally today. That being said, all we're really doing is stretching the upside of what's been this trading range, and we're hovering at this point right below levels that seem somewhat significant around S&P 3000. A lot of stuff comes together right there. We'll see if that ends up being a little bit of a gravitational pull in the short term. Did want to point out on a year-to-date chart of the S&P a few significant dates where you had big news-driven rallies and news about the coronavirus. So first, you remember that crazy March 13th late-day rally when the president had that press conference with CEOs. Market was up well over 1,000 points. There was an idea that there was going to be a national testing program, and there was a little bit of enthusiasm that maybe we were getting our arms around things. That rally was doomed. It was obviously went to new lows over the next 10 days. Then, of course, April 29th, that was a rebound high for the S&P 500 come right as the remdesivir news came out that maybe it was a good treatment. That also was given back in the very short term, but not in a real disastrous way. And then, of course, Monday, we had the Moderna vaccine trial, good news that was kind of taken as an accelerant for the upside. And then yesterday, we gave some of it back. My point here is it's very much like the trade war headlines where on a given day, they seem to be the trigger for a lot of these rallies or sell-offs. But it's around an underlying trend. And the underlying trend has been the market is willing to bet that reopening means April was the low for economic activity, and you have some momentum toward at least a lot of companies working their way through this phase without necessarily having disastrous consequences with their debt or anything else. So I think it's important to kind of put some of those headline-driven moves in a bigger context.
What do you say to people, the bears mostly, who say this can't be a new bull market because the volatility is still so high? It's not normal to see, a 900-point move, for instance, on the Dow.
It's not normal if it stays this way for much longer. Basically, if you looked at 2009, and I don't really think that this was a 2009 type event. It just didn't take as long to gather up and all that. But when you're coming out of the lows, you still remained very volatile for a few months after you got through those lows. I do think it's fair to say that the volatility levels have not eased back as much as you might expect, given the fact that the S&P is up more than 35% in 6 weeks. But I do think you have to monitor that to see if, in fact, we're stabilizing around either these levels or maybe creating a new trading range if we base right here and go ahead.
Mike, thanks so much for that. We're higher by 1.6% or so on the S&P 500 as we stand. The Fed releasing minutes from its April meeting just last hour. Steve Leisman has the highlights of those minutes for us. Steve.
Yeah, Will, from the rosy outlook of the stock market to what Paul Harvey used to say, the other side of the story, where the Fed minutes from the April meeting, so the Federal Reserve saw that the coronavirus was causing tremendous human hardship and economic hardship, and was really concerned that it would weigh on economic activity. They said some businesses, quote, some business models, may no longer be viable in the new regime. Now, this is from 3 weeks ago, but some of the comments of Fed officials recently have kind of echoed these concerns that are out there, including a concern about a second wave, which Fed Chair Jerome Powell just mentioned last week. And so that's why we want to take seriously some of the commentary in the minutes about additional things the Federal Reserve can do here, including they talked about additional QE at the meeting. They talked about strong forward guidance, either date-based, in other words, we're going to stay low and keep interest rates at zero until a certain time, or data-based until, for example, the unemployment rate falls to a certain level or inflation rises to a certain level. Those would be date or data-based forward guidance. And also, the big bombshell here, though only discussed by a few members, the possibility of interest rate caps on treasuries. Finally, the Fed staff did not see a full recovery through the year end, and they were concerned about the potential for secondary outbreaks. Finally, a number saw potential for a better case scenario that was out there. But I will say, guys, Robert Kaplan, Dallas Fed president, on Squawk this morning, did discuss, saying, quote, my guess is we're going to need to do more. So this idea of the stock market being relatively content with the outlook, I don't know if it's based on the idea that the Fed will do more, but the Fed does not necessarily share the certainty of that outlook.
Steve Leisman. Steve, thank you. We've got some breaking news on theme parks. Julia Borston has more for us. Julia.
Sarah, another step towards the reopening of the theme parks in Orlando. Officials from Walt Disney World, Universal Orlando, and SeaWorld will present their plans for reopening their parks to the Orange County Task Force on Reopening in a meeting slated for tomorrow afternoon. Now, this, of course, would potentially include dates that they would plan to reopen. Parks will need approval from Orange County's government before they can reopen, according to the governor, who did invite them to submit their plans this past Friday. All of this comes as today Walt Disney World takes its first steps to reopen. It just reopened part of its outdoor mall called Disney Springs with a sort of rolling opening of those retail outlets and restaurants. But a lot will hinge on what the government says about how these parks can reopen. You see Disney shares now up over 3.5%. Comcast shares up nearly 2%, and SeaWorld shares up about 9%. Guys, back over to you.
Yeah, some light at the end of the tunnel there. Julia, thank you. Target reporting its Q1 earnings before the bell today, beat on both the top and bottom line. So its digital sales surged by 141%. However, Target paying a hefty price to keep stores operating amid the pandemic, spending about $500 million to cover store cleaning and increased wages. Joining us for more is Oliver Chen, senior retail analyst and managing director at Cowen. Oliver, good to have you with us. We got a pretty good taste about the difference between essential stores that were allowed to be open during the pandemic, Target, Walmart, Lowe's, Home Depot, and everybody else that wasn't. Among the essential stores, who did the best?
Yeah, we're excited about Target. Target and Walmart both had very good prints. Target, 140% digital growth. That's really impressive. And this whole theme of bifurcation, clearly the malls, JCPenney, apparel is quite apparent. Month-to-month volatility has been a risk factor too. But we like Walmart, Target, Costco. Thematically, curbside pickup, that's huge. Drive Up, over 5 million people used it at Target this quarter. 40% of them are new. And really reinventing retail in terms of Drive Up, curbside pickup is where we're headed. And this has happened in 3 weeks as much as it would have taken 3 years of different changes. So innovation here, rapid innovation, rethinking safety, and also the entire store experience. This has been happening now very quickly. Target and Walmart had invested in this, and it's really paid off. And we do see the big getting bigger. So these are all themes we're paying attention to.
Are these shifts, Oliver, that we're seeing temporary or permanent?
Well, the trick to curbside pickup is customers really love it, and they spend more often. The other issue in retail is there's a lot of consolidation happening. You're doing less transactions, but you're spending more. So the short answer is yes, it sticks, and that enhances customer lifetime value, loyalty, market share gains. It's a nice flywheel. As you use it, you do like it.
So what does it mean for the other retailers that have remained closed? We're going to get L Brands, for instance, which owns Limited and Victoria's Secret, all the trouble spots, right, in the mall that weren't allowed to be open, that are going to start reopening. How did they deal with the surge in online usage of places like Target, which also does sell apparel and accessories?
I mean, I think there's an aggressive move to try to implement curbside at so many places that wasn't traditionally done. Grocery was an early innovator with this channel, so it's a model that others will have to follow. And you're totally right. Apparel is a big question mark. People are not buying as many pants, really, and they're buying a lot more printers as people really stock up on home essentials and office. So we've seen a lot of apparel write-downs and inventory write-downs, and we also expect a lot of promotions in that category. It remains to be seen. It'll be an interesting time for apparel, which really needs to reinvent itself. Loungewear, denim, active, athleisure, those are uptrending. But the apparel market and discretionary items and the future of the mall, co-tenancies, rent expense, those are all things we're focused on. We also think less is more, the rise of re-commerce, rethinking clothing as a service, and this value story where prices matter. I'm getting your clothes at Target, Costco, Walmart. People love that too. So these are all key issues for the future of retail.
Oliver, when you consider some of those numbers you mentioned from Target and Walmart and others, should Amazon be nervous? I guess not relative to all sorts of other retailers that might be struggling a lot, but relative to where people's expectations have gotten for Amazon and the path it's on over the last sort of couple of years, and of course where their share price is, which is all-time highs.
Yeah, well, Fred, the major theme here is the store and the future of the store as a hub. So curbside pickup is the genesis of physical and digital, and rethinking what retail means with merging digital and physical. Are they nervous? I think the future of retail involves stores, and 80% of Target's online orders were fulfilled by stores, and curbside pickup was very successful at Walmart and Target. So the future involves stores. The future also involves grocery and AI, and all these factors are converging. So everything's up for consideration, and we'll probably see a lot of interesting, bizarre, relevant M&A, especially as apparel and department stores need to reinvent themselves as well.
Oliver Chen, thanks so much for joining us.
Thanks, Sarah. Thanks, Wilfred.
Up next, shares of Moderna on a wild ride this week as the market closely watches every piece of news surrounding its vaccine candidate. After the break, we'll speak with a former Harvard Medical School professor who says Moderna's Monday announcement was akin to a CEO announcing favorable earnings without supplying the underlying financial data. We're back in a couple minutes.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest editions.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history.
There it goes, 3-2 pitches, hit in the air and hit well. Center field, Bader back, at the wall, it's gone!
Search classic Game Replays to relive some of the great contests in America's pastime.
Ground ball out to Jackie Robinson, up with it over to Reese for one, back to Hodges. It gets away from him. Ferris trying to go to second.
It's on demand, it's free, and it's only on TuneIn. Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search Sports Documentaries on TuneIn.
Okay, here we go.
With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL Show, where a rotating cast of Ringer experts talk with players, coaches, and special guests about the NFL landscape.
A lot of the other teams that we consider...
Or ESPN's NFL Live.
If there are some delays because of the COVID-19...
Search sports on TuneIn to explore these pods and much more.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know.
Personalized meal plan.
Welcome back. 45 minutes left. We're higher by 1.5% or so on the S&P 500. Let's have a look at some individual market moves. Shares of Facebook hitting a new all-time high today following the launch of its shop platform, which lets businesses set up free storefronts on Facebook and Instagram. The push into e-commerce, powered by third-party services like Shopify, and could unlock a $1.3 trillion market, according to Bernstein. It's up 6.5% today. Analog Devices is jumping after reporting earnings that beat estimates this morning. It posted earnings per share of $1.08, topping analyst expectations by 5 cents, according to Refinitiv. Sales fell just short at $1.3 billion, but it's up a healthy 8% today.
Moderna's encouraging news this week is putting a spotlight on the rapid speed at which companies are working to come up with a viable vaccine. But even when that vaccine is found, how quickly can companies actually scale up manufacturing? Meg Terrell has been digging into that question for us. Meg.
Hey, Sarah, it's a tremendously important question. And experts say we don't actually have the capacity to manufacture a vaccine if or multiple of them are successful for the entire world right now. But that is what these companies are working on. And to do it, they're striking a lot of partnerships. Take a look at just some of them. These are some of the biggest companies in the race. And some of the partners that they're working with, companies like Emergent Biosolutions, which is working with Johnson & Johnson, or Lonza, which is working with Moderna. Those companies are what are known as contract development and manufacturing organizations, an industry a lot of us have never really heard of, but that are playing a very large role and an increasing role in making all of our medicines. And take a look at the geographic distribution at some of these companies and the size of the market here. You can see that while North America has a sizable presence, according to PwC, of about $25 billion in revenue in 2018, Asia Pacific has a $44 billion slice of that market, and that's projected to grow to $80 billion by 2025. Of course, this just raises questions about the geopolitical concerns about where these vaccines get manufactured and how that's going to play into where they get allocated if they're successful. And there's going to be major questions about that. We talked about it with Moderna's chairman just last hour about whether there'll be enough supply of these vaccines. Here's what he said.
I think no matter how many of these vaccines actually make it over the finish line, we will still be constrained by the supply. A lot of numbers are being thrown out, but these are just estimates.
And so, guys, some of the things these companies still say they need, more funding in order to start building up the capacity to get this done at such a massive scale. Sarah and Wolf.
Mike, fascinating angle there. Thank you very much. Now, Moderna shares have been volatile after releasing positive data about a phase 1 trial for its COVID-19 vaccine on Monday. There's been criticism about whether the results were as promising as they were initially perceived. Former Harvard Medical School professor Dr. William Haseltine wrote an op-ed in the Washington Post with the title, "Moderna's claim of favorable results in its vaccine trial is an example of publication by press release." He joins us now. Dr. Haseltine, thanks so much for joining us. I said the word data at the top of that intro. Your criticism is that there was not sufficient data in their release, and because of that, the market was able to applaud the results perhaps more than they should have done.
I would say several things about the announcement. It was premature. Only 8 people had been studied. It was not impressive, and it was opaque. If a CFO had tried to get away with the same kind of announcement, it would have been greeted by derision and possibly by investigation.
But isn't the point that some of these companies, Doctor, are trying to get these announcements out on purpose as fast as they possibly can for the benefit of public health, for the benefit of plans to reopen economies, for the benefit of trying to get, say, treatment information out there, and vaccine goes along with that too? I mean, we're in a pandemic where, we have people in the emergency rooms fighting this right now.
The question is not that we're not an emergency. We know we're an emergency. But in an emergency, it's even more important to be clear about what you know and what you don't know. There is a process which is vastly accelerated. The moment the data is put together, the moment it can be presented, it's on the internet for free. Everybody can see it. Moderna did not follow that. We don't know what happened. You don't know what happened. I don't know what happened. Nobody, maybe a few people in their company know what happened. We can't see that data. And again, let me just take the financial example. Even in an emergency, that's not warranted. There are many processes that we have put in place that allow global sharing of data. That's not the issue. The issue is, do we know what happened? And the answer is, we don't.
Dr. Hazeltine, has this type of practice become more of a norm in recent months, let's say, or even recent years? Do you think Moderna was acting, even if not ideally in your view, acting in line with how others do this, or did they purposefully, do you think, release this information without all the full details?
This is abnormal. I hope it's not becoming the new normal. This is a great exception to what's happened before. Rapid publication, even before the manuscript is reviewed or accepted, is now part of the practice in this time of emergency. That, I believe, is good because everybody can look at the information. A doctor can make a decision. Let's take remdesivir. We still haven't seen the data for that. It was announced that it worked, sort of. It didn't save any lives. It let people get out of the hospital who might have gotten out anyway, maybe a day or two earlier, a few days earlier. But we don't know it really did. We can't see the data. And what is a doctor going to do? Is he going to use the drug? When a paper came out the very same day that says it doesn't save lives, it doesn't have any effect on the virus, what is the doctor on the front lines going to do? Are people battling over a drug that doesn't work? We don't know because we don't see the data. That is abnormal and it's wrong. You wouldn't accept that.
Well, I have two things on that.
Accept it for this.
I mean, are you questioning Dr. Fauci, who also came out and said that this was encouraging news and, stood in front of this NIH study? He's our foremost infectious disease expert in this country. And the other thing is the FDA approved it. So, I mean, I assume the FDA had to at least have seen the data underlying those claims.
It is not approved by the FDA. That is not an approved drug. It is recommended.
They suggested it for emergency use.
That's right, and we don't have the data for that. Am I questioning Dr. Fauci, who I've worked with for many, many years and I regard as a close friend? Whether he shaded what should have been done, I think is a question. He's obviously under enormous pressure for positive results, but I think it was not the right thing to do if you can't see the data. It's 21 or 22 days, and we still haven't seen the data. How do we know it works? When another manuscript that came out that was published in a very prestigious journal that says it doesn't work. So what is the doctor going to do?
Dr. Hazeltine, I just want to come back, if we step away from Moderna as vaccine and remdesivir specifically. Where do you stand on the likelihood and the timeline for when we will have an effective vaccine, whoever it is that ends up manufacturing it?
Let me say the first question is if we're going to have an effective vaccine. We don't know. People have tried to make effective vaccines for coronaviruses, the type of virus this disease is, for some time. They've not yet been successful. Some of the data that we've seen, one paper suggests with a killed virus vaccine, you can get protection. Another paper from a group in England, in Oxford, when you actually got to see the data, none of their monkeys that were vaccinated were in fact protected. They all had a nasal infection. Yes, they didn't have as much virus in their lungs, but they still had a nasal infection. 100% of the vaccinated monkeys got infected. So we don't know the answer. I can't answer that question. And if we don't know the answer of if, we can't tell you when.
Dr. Hazeltine, we appreciate you coming on.
You're welcome. Thank you.
Thank you for the perspective. After the break, the road to reopening, a major milestone today as all 50 states have now begun the process of restarting their economies. We're going to dive into what the latest data show next.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
It's TuneIn Sports on this day. On this day in 1991, Chicago Bulls and NBA superstar Michael Jordan is named the NBA's MVP.
Here we are with Michael, surrounded by his mom and his dad, wife. Under the hat, that wasn't fair, but I'm covered with champagne. I can hardly see. Michael, what does it mean to you?
It means so much. I mean, not just for me, but for the team.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying
to stand out stations and podcasts. Stay in touch with TuneIn.
Welcome back. 45 minutes left of trade. A number of state-specific developments on coronavirus responses. In Georgia, the latest statewide hospitalizations for COVID-19 dropped by about a third in the last 2 weeks, even though it was one of the first states to reopen. The total number of cases still increasing, though. In Florida, another test for reopenings. Overall cases are steadily increasing, but the positive test rate is decreasing. That's also encouraging as a greater percentage of the overall population is tested. That state has reopened retail and barber shops. You can see not as bad as Georgia, but cases still steadily increasing. And across the country, mobility data from Apple and Google showing a return of economic activity like gas usage, which is up. In Ohio, Google data shows retail activity just 18% below pre-pandemic levels. Transit now just 14% lower than normal, despite the growing case numbers in those states. Overall, painting somewhat encouraging picture for the slow reopening of the states, Wilfred.
Yeah, indeed. And one of the factors cited for the strong markets we've seen today and this week, we're up 1.6% on the S&P to 3.8% for the week so far. Still ahead, Vogue's Anna Winter will join us to discuss a new partnership with Amazon to connect small and medium-sized designers with customers as the fashion industry faces hurdles during the pandemic. And as we have to break, here's a check on bonds yields. Dipping today, the 10-year sitting around 0.68%. We'll be back in a couple minutes.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
To cnbc.com/select for the latest on relief for loans, mortgages, deferments, and more. CNBC Select, the stories you need for the smartest way to handle your credit.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then, whenever you want to browse your favorites, you'll find everything under the Favorites tab.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games. Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic game replays to start listening.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
For car insurance.
Just under 30 minutes left of trading. Dow's up 375 points. Here's something for your radar. Argentina is barreling toward a debt default on Friday again. And this time, retail investors in the U.S. stand to lose. Among Argentina's biggest creditors, BlackRock, and a group that also includes Fidelity and T. Rowe Price, some of the largest money and mutual fund managers in the world. According to people familiar, as of today, I can report that BlackRock is pushing for the group of other bondholders to place a new offer to the Argentinian government, valuing the bonds at 50 to 55 cents on the dollar, which does mark a softening of BlackRock's stance and a willingness to take on more losses there. However, it's still far apart from the government's initial proposal of 39 cents on the dollar, according to a person familiar. Bondholders balked at that deal. So we'll see if a group of bondholders back BlackRock's latest offer and if they can prevent a default with the government on Friday. All of this drama predating the coronavirus. The broke government has been trying to reach a deal with creditors to restructure $65 billion of international bonds before Friday. Failure to hand over that money, Mike Santoli, and reach a deal would mark the country's 9th default. And I think the reason of highlighting it is these bonds, unlike the last fight with Paul Singer and Elliott Management, hedge fund versus Argentina, is these bonds are in index funds and U.S. investors hold them.
Exactly. Yeah. Yeah. I mean, obviously they would be in like an emerging markets government bond index fund. And it's a little bit of a lesson on, what the risks are when you chase yield in those types of places. These are funds that right now are, they'll yield 5, 6, 7%. In this environment, the only way you get that is by taking on some kind of risk, whether it's default or currency or others. So, obviously a little bit of a lesson. Presumably, these particular bonds would be marked down to some degree in some of these funds. So it's not as if it'll be blindsided by these, but definitely that is the takeaway.
Mike, thanks so much for that. Sarah, great stuff. We'll keep an eye on that on Friday. Time for a coronavirus news update. Frank Collins got it for us. Hi, Frank.
Hey, good afternoon. Well, here's the very latest. Vice President Mike Pence visiting Florida today to check out the state's reopening efforts and deliver personal protective equipment to a nursing home in Orlando. Pence says 8,000 inspectors have visited nursing homes across the country to make sure they are meeting health standards to prevent the spread of COVID-19. In Michigan, barbers gave free haircuts on the State House lawn. It's part of Operation Haircut, a protest against the stay-at-home orders that have kept the state's salons and barbershops closed for weeks. The State House has been the scene of several protests as the state remains shut down. Restrictions will be eased in parts of northern Michigan on Friday. Temperature screeners are one of the new jobs that have been created during the pandemic. Mass sewing is also on the rise. CNBC teamed up with ZipRecruiter to look for jobs that are growing in popularity. Go to CNBC.com for 6 more in-demand jobs and a look at what they're paying. That's the latest. Sarah, back over to you.
Frank Holland. Frank, thank you very much. We've got 27 minutes left of trading. Here's where we stand. We're strong across the board, seeing more than 300-point rally in the Dow, 354. S&P's up 1.6%. The Nasdaq charging ahead, up 2%, just adding to some significant gains we've already seen this week so far. After the break, what happens when that pantry loading ends? We're going to ask the head of Unilever North America about consumer trends as the world slowly starts opening up again.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn.
Is the salmon wild caught?
She only eats wild caught.
I need a price check on honey.
Don't get mad. Get E-Trade and get more than just trading. Investing, banking, guidance.
This is not a time for business as usual. Or is it? What if business as usual means putting people first and understanding their needs? If that's your business 365 days of every year, then business as usual is precisely what these times require. Which is why your Lexus dealer will do what we've always done. Put you first. Find out how we can service your individual needs at lexus.com/people first.
There's a lot of sameness among online brokers these days. IBKR stands out in the crowd. We offer the lowest trading and borrowing costs. Our clients have the choice of investing globally or locally in stocks, options, futures, Forex, bonds, and funds from a single integrated account. Our premier technology enables you to optimize speed and efficiency, perform sophisticated portfolio analysis, and manage your accounts. Start investing today at IBKR.com.
Let's hope this safety last attitude goes away, because if there is another big outbreak and we have to go back into lockdown, many of today's winners will come right back down. Watch or listen live on the CNBC app.
Welcome back. Some breaking news on Ford. Phil LeBeau's got it for us. Hey, Phil.
Hey, Wilf, take a look at shares of Ford. 2 Ford plants that have restarted production are now both idled again this afternoon. One of them expects to be back up in the next couple of hours. One is the Ford plant here in Chicago. That they shut down production today because of a parts shortage from a supplier in Northwest Indiana. The other Ford plant that's in question is the Dearborn plant. It's not in question in terms of what's happening with production. They had to idle it this afternoon due to a positive COVID-19 test with one of the workers there. They plan to restart production a little bit later on this afternoon. Guys, this is not surprising, and that's why you're not seeing much reaction from the stock. Nobody in the auto industry expected this ramp up of production to be a smooth one. They expect to see this with suppliers and automakers, at least for the first week or so, as they're starting to get these plants back online and they're dealing with coronavirus, certainly in certain areas like in the Detroit metro area.
So wait, Phil, just to be clear, are they testing these employees at the plant?
Yes. Yes, they are. And they also, there's a number of protocols before they begin their shift. And then if certain things are triggered as far as temperature checks, what they're saying in terms of who they may have been exposed to, then they will be administered a test. And that's how they determined that this worker was positive for COVID-19. Remember, Ford's put in a number of safety protocols here, not only with screening before people come into the plant, but also when they're in the plant in terms of social distancing, trying to limit interaction of workers. But guys, and it's not just Ford, it's all manufacturing plants. It's really hard to start back up in an environment where everybody was only a couple of feet away, and now you're going to be at a greater distance in many cases.
Yeah, an issue for all employers, I would think, as they're looking to reopen. Phil, thanks.
You bet.
Phil LeBeau. Shares of Unilever trading a little bit higher, up 1/3%. The company has a wide-ranging portfolio of consumer brands, more than 400 of them, from food to household cleaning products to health and beauty. So how is the company holding up amid the coronavirus pandemic, and do they expect the shift in consumer behavior to continue once this is over? Joining us by phone is Fabian Garcia, Unilever's North America president. Fabian, thank you for joining us. First, talk about the impact you're seeing across your brands and your business and the balance between people shopping at the grocery store and for essential goods and the hit you're taking from them not going to restaurants.
Well, thank you so much for hosting us. First of all, I want to recognize that the pandemic is a humanitarian crisis, so obviously we're all impacted by it. From a business point of view, you heard Alan Jobe report our results. We were flat as a company globally. In the U.S., we grew 4.8%. And what we have seen in the market is indeed a shift of consumer behaviors. So consumers obviously have been stocking up, and that happened through the beginning of the pandemic. And obviously now things have receded a bit. But consumers are adapting to the pandemic by staying home, obviously cooking more at home, obviously by buying more in e-commerce. And as all of us have experienced, we're all more conscientious and with a heightened sense of hygiene and cleaning. So we are observing those consumer changes, consumer behavior changes, and adapting to them.
Fabian, talk to us about the month-on-month trends that you've been seeing, and you mentioned some stockpiling that may have abated a little bit. Gauge for us the level with which that has fallen from March, say, to today.
We continue to see a upward trend, again, reflecting these trends that I'm talking about month to month. So in March was all about building up pantry stock. And in April, consumers were still looking to fill up the stocks on products that were scarce in the supermarkets. Of course, Unilever being a company with a very resilient supply chain, we were able to respond to extremely high peaks in demand in many of our categories, and we were able to supply fully the products in the hygiene, food, and obviously cleaning categories where we compete.
Fabian, at Unilever, you guys have been very acquisitive and looking for brands in beauty and healthcare and cleaning supplies that are cleaner, which was where the consumer was going before this pandemic. You know, non-toxic, no parabens, that sort of thing. Has that just been ditched and thrown out the window, given the fact that we're in this crisis and people want the real stuff, the real bleach, you know, the real cleaning supplies, no matter how many bad chemicals are in them? And do you expect that to change permanently?
I will not speculate on our M&A activity, obviously, but we have had a lot of positive reaction to the products that we offer in the cleaning area. Also, I want to highlight that all of the Unilever products in all categories where we compete provide consumers with great value at affordable prices. And we compete in categories that are very relevant now. So I don't know how many people in your audience understand that Unilever is the company behind brands like Dove Bar, brands like Suave Shampoo, brands like Vaseline, brands like Talenti Ice Cream, Ben & Jerry Ice Cream, or Knorr Meal Solutions, or Seventh Generation Cleaning. So we have a plethora, over 100 brands in this country, favorite brand for the American consumer, that are now in full supply and addressing the needs that they today have because of their obsession with hygiene, their need for cleaning, and their greater time at home that is leading to much more cooking at home and enjoying time with family more than we ever thought it was possible before.
Fabian, thanks so much for joining us.
Thank you.
This is the last commercial we're going to take before we approach the close. Up next, we'll bring you uninterrupted coverage of the final minutes of the session when we take you inside the market zone.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest editions.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen. With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Connor to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search classic game replays to start listening.
It started in 1898, helping clients and communities invest in hospitals and schools, roads and bridges, farmland and forests, small and large businesses, and sustainable cities around the globe. It continues today, more than 120 years later, investing to make an enduring impact on our world.
You should be mad at leaf blowers. You should be mad your neighbor always wants to hang out. And you should be mad your smart fridge is unnecessarily complicated. Making ice. But you're not mad because you have E-Trade, which isn't complicated. Their tools make trading quicker and simpler so you can take on the markets with confidence. Don't get mad. Get E-Trade and start trading commission-free today.
The Market Zone is sponsored by E-Trade. Trade commission free today with no account minimums.
14 minutes left in the trading day. We are now in the closing bell market zone. Commercial-free coverage of all the action going into the close. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day, along with Ritholtz Wealth Management CEO Josh Brown. Welcome back, Josh. We'll kick it off today with the broader market. Stocks rebounding with the S&P and the Nasdaq erasing yesterday's losses. The Dow is up now 377 points. The S&P 500 up nicely as well. And guys, if we close here at 2972, that would mark, Mike Santoli, the best level since March 6th. We are wiping out the pandemic losses.
Yeah, really, it was only 2 weeks before that or so, 2.5 weeks when we did peak in the S&P February 19th. It is a pretty remarkable move. I almost wonder, is this market going to have to keep grinding higher until people stop asking why is the market so up so much, given what's going on in the economy? Clearly, nothing is interrupting the general sense right now that incremental reopening is going to kind of refresh business activity. The whole story that we've been kind of looking at for weeks now, there's just nothing to come along to necessarily falsify it in the short term, and therefore underinvested investors feel like they have to at least gain exposure to that theme in parts of this market that just got blasted when we stopped the economy intentionally. So that's what's going on. We have that 3,000 level on the S&P. It's less than 1% higher from here. It's also where the 200-day average is very widely watched. Maybe we're a little bit too close to that hot stove not to at least touch it the first time.
Josh Brown, with this scale of rebound, have you been taking profits in any stocks or sectors?
No, and what we're hoping for is, I don't know about revisiting the lows, but we are hoping for opportunities to add and do another rebalance. We did one in that late February, early March period, which worked out really well, and we're hoping there'll be another opportunity. That's what asset allocators look for, so we're hoping it happens. I think the really key thing to keep in mind here, sometimes it's really simple. So there's two things that are worth pointing out. The first is the index returns. The indices are dominated by companies that are secular growers. Their market caps are enormous. They determine what the direction is of the major averages, and because their weights are so high, what you're seeing the index do is very misleading until you look down a few rungs and look at the median stock. And the median stock's doing better and certainly starting to price in a reopening, but there's a long way to go. The second thing, and this is important, back to the asset allocation concept, if you're looking at 5, 7, 10-year treasuries and you're saying to yourself, okay, I know there's a 95% correlation to starting interest rates with forward returns on an average annual basis. Well, I can't afford to have my money get put to sleep at 1%, at 1.5%. I actually have to earn something on it. So if I'm willing to give corporate America the benefit of the doubt that it'll be able to climb out of this earnings hole, and I'm saying to myself, I really don't want to be more than 30% bonds or 20% bonds. I want to have equity. Then it explains perfectly why you're seeing people being back in the market, despite the fact that we have yet to see maybe even the earnings trough. We might not have seen the worst of the crisis financially, but it's possible that we've seen the worst of what it will do to stock prices. On the topic of earnings, Lowe's beat their earnings estimates this morning. The home improvement retailer seeing same-store sales surge more than 11%. CEO Marvin Ellison speaking with our own Jim Cramer on Mad Money about the strength of the business.
There's no way that we could have the sustained levels of growth online if we hadn't made that platform migration to Google Cloud. And we have a series of other really great functionalities that you're going to see, from a one-click checkout, search and navigation, the ability to schedule and do all types of visibility of order destination online. We're going to be rolling out buy online, pick up in store lockers. We're going to modify curbside delivery to be more digitized. We have an array of things that's going to give us one of the best-in-class .com platforms.
You can catch more of that exclusive interview on Mad Money tonight at 6 p.m. Eastern Time. Mike, where do you stand on the difference between Lowe's and Home Depot's numbers, and with it, both of them compared to the likes of Walmart and Target?
Yeah, I mean, Lowe's has been this kind of ongoing transformation story below the surface, so it's a little more than just the macro picture right now. What I find interesting is it's now in the class, Lowe's is, of the acknowledged big dominant winners, at the expense of smaller players. But again, Lowe's stock traded well off its highs of the day. So I almost wonder if the market's saying, we got it. We already gave these guys benefit for actually being very strong in this environment, and maybe we have to spread our bets elsewhere if in fact it's going to be a reopened economy. So you can both say good numbers, good strategy, and maybe the market already has gotten there.
Yeah, Target also down 3%, maybe on a similar kind of idea. Yeah. It is a new era at United Airlines. Scott Kirby taking over as the carrier's CEO. Phil LeBeau with the details and with the interview today. Phil.
Sarah, when you look at United Airlines, the stock getting a bit of a bump today. The virtual annual meeting was held, and Scott Kirby said what we've heard over the last couple of days. They are seeing a modest increase in bookings, but let's be clear, it's a very modest one. Where were they in mid-April? Fewer than 10,000 passengers per day. Where are they in mid-May? Well, a little bit better, up to 35,000 to 40,000 passengers, but that bottom point there is the key one. Last year, they were averaging over 500,000 people per day. In terms of when things start to get higher to a more normal level, here's Scott Kirby on Squawk Box this morning.
We don't know what demand will be in the fourth quarter and the first quarter. No one knows what the recovery is going to look like. And so we need to prepare for flexibility, and that's the message we're sending to all of our people. We hope, as I said, that we can work with the unions to avoid furloughs and actually just use fewer hours.
United cannot lay off workers, have major layoffs until after September 30th. That's part of the agreement they made with the Treasury when they took $5 billion from the federal government. They plan to shed 30% of their management jobs this fall. Guys, we're now in this period here where it's all about cash conservation and seeing if they can see a sustained increase in demand. And by increase, we mean something more than 20,000 people per day.
Phil LeBeau, thanks so much for that. United up nearly 5%. Now, Chinese tech stocks under pressure today. Deirdre Bose has got the details for us. Hey, Dee.
Hey, Wolf, take a look at Chinese internet ETF KWEB. It took a stumble midday as a Senate bill was passed by unanimous consent that could delist Chinese companies from U.S. stock exchanges. If written into law, it would require companies to show that they are not owned or controlled by a foreign government, and this is widely seen as aimed at Beijing. Alibaba, take a look, it fell to session lows and looks to end the session down by about by about 1/3%. So we're recovering a little bit there. This is a more than $500 billion market cap company, though. Remember, JD.com, Tencent Music, Baidu also getting hit on the headlines. JD.com, though, should also note recovering quite nicely. And Wilf, that may be because it still needs to be written into law at this point. Back to you.
Yeah, Dee, thanks so much for that. Josh Brown, what's your take on whether or not these companies will be able to get in line if this law does become law, and whether or not the U.S. listings are totally crucial to them or not?
So this is how you know that most of the money moving on headlines is algorithmically driven. There's nobody that understands this space that was a seller on this news today, unless they thought it was greater fool and they'd be able to buy it back cheaper from someone else that doesn't know what they're talking about. 90% of the 200 listed U.S. listed Chinese companies that are trading here, it's about $1 trillion in market cap combined. 90% are audited by one of the big four. So Deloitte, KPMG, et cetera, Price Waterhouse. So they're already mostly in compliance. Now, should there be a lot of Luckin coffees running around on our exchanges? No. So I actually like that the Senate is looking at this seriously, and we'll see what the House ends up doing. I don't think there should be publicly traded China frauds. I do think that companies are domiciled in foreign countries, China or elsewhere, understand that there are consequences to their listing if they don't play ball with our regulatory norms. So I like it. I just don't know that it applies to Alibaba. Alibaba is a $600 billion company. JD.com is over $100 billion. So these companies have made U.S. investors money. And another thing that's important is they're already anticipating the politics spilling over into the market situation. So last year, Alibaba very quietly relisted itself in Hong Kong. You're going to see Trip.com do the same thing. They're already in motion. You're going to probably see JD do it, and others. So it's going to be a political issue more so than a financial issue. So I think people that all of a sudden got bearish on Chinese growth metrics, or Chinese internet metrics rather, probably don't really understand what they were invested in the first place.
Well, those stocks are coming back from dip earlier in the session on that news. Let's get back to Julia Boorstin. She's got an update on the theme park story reopenings that we brought you earlier. Julia.
That's right. Well, while there is this Orange County meeting tomorrow where we were told that the theme parks would be presenting their reopening plans, we just heard from Disney about Walt Disney World saying that is incorrect, and they are not submitting a reopening proposal tomorrow. No details on when they will be submitting that proposal. We have reached out to Universal as well as SeaWorld about their Orlando parks and whether they are planning to submit their proposals to the reopening task force meeting that's happening tomorrow at 2 p.m. Eastern. We have not heard back from them. We're also reaching out to Orange County to get more details on this reopening task force and what exactly is happening at this meeting tomorrow afternoon. You still see Disney shares at more than 4%. Back over to you.
Yeah, just slightly off their session highs. Julia, thank you. And the second best performer in the Dow, Mike Santoli, Disney's been really buffeted around by all these headlines on vaccines and reopenings. It's sort of a litmus test for whether, as a society and an economy, we're going to get back to normal.
Right, and what is normal if you translate it into occupancy rates at resort hotels that are owned by Disney? Also, by the way, no billion-dollar box office movies getting released either. So obviously, all that's been already kind of incorporated to some degree in the stock, but it is going to be one of those sensitive names to any fluctuation expectations for a fuller return to some kind of normal commerce.
All right, looking at the overall market, we're seeing pretty steady gains here, all sectors higher. Mike, what do you see in the market internals?
Yeah, they've been pretty sturdy. This is basically about 80% of New York Stock Exchange volume has been to the upside most of the day. That's pretty inclusive, as I was saying before. So that you would check off and say that the rally looks relatively healthy at this point, even though we're kind of fading a little bit from the day's highs. Did want to highlight, too, just to the prior point, that PEJ is an ETF, Invesco Leisure and Entertainment Sector Fund. And by the way, Disney, the second biggest holding here. Chipotle is the first. It's restaurants, hotels, media companies. all the stuff most impacted by the shutdown. It's up 12% week to date. So clearly that's been a theme running due. But guess what? It's also down 37% from its high. So that's the terrain that we're now trying to recover here. And there's a lot of it in these types of stocks. And then the volatility index, it is succumbing below 30. We have a 3-day weekend ahead. This should bleed lower. It should get toward a range that suggests more normalcy. But to your point earlier, Sarah, it still seems like there's aftershocks or at least agitation in the market just because the size of that downside shock in March was so great, it's slow to fade.
Mike, thanks so much for that. We've got 1 minute left of the session. We're higher by 1.7% on the S&P 500. There's the Dow up 370 points. The high of the session was up 440 or so, but nonetheless, still a healthy gain of 1.5% today on the Dow. The Nasdaq leads the charge today. It's up 2% in terms of the three major indices. If you include the small caps, then the Russell leads. It's up close to 3%. All 11 sectors on the S&P 500 are higher. Energy at the top of the list, up close to 4%. Oil prices up 5% today, continuing a very strong rebound of late, up 13.8% so far just this week. Bottom performing sector is healthcare, but as I said, that is still positive. Utilities and real estate near the bottom of the pile as well, but all 11 sectors are higher. The dollar today just slipping a little bit, mainly because of some strength in the euro, whilst the treasury market seeing yields slip a bit, the 10-year at 0.68%. As the bell goes, though, nicely higher, 1.7% on the S&P 500, taking gains for the week to 3.8%. Dow's up 1.5%, Nasdaq up just over 2%.
Another strong finish for the market, adding to gains for the week. Welcome back, everyone. If you are just joining us, I'm Sarah Eisen here with Wilfred Frost and Mike Santoli, CNBC Senior Markets Commentator. Take a look at how we finished up the day on Wall Street. Dow closing higher, 370 points, a gain of 1.5%. And you got some leadership there from Disney, which actually closed as the best performer on the Dow just in the last minute. Intel, American Express, Chevron, and Exxon, that led the charge with oil prices nicely higher today. The S&P 500 saw every sector higher, as Wilfred just noted, led by energy, but you still got more than 2% gains for technology, financials, communication services as well. The Nasdaq also closing higher, up about 2%, now less than 5% away from its all-time high. And the Russell 2000 index of small cap played a little catch-up today. It was the big winner, but still is the big loser on the year. Closing up today 3%, which takes it down about 19% so far for 2020. Coming up, we will ask the CEO of the bank, Truist, about the outlook for financials and his company's coronavirus relief efforts. And then later this hour, we will discuss the new fashion partnership between Amazon and Vogue. We're going to speak exclusively with Editor-in-Chief Anna Wintour. Joining us first to talk about the market today, Josh Brown, CEO of Ritholtz Wealth Management, is still with us. First, though, to you, Mike Santoli, and how we interpret the action today, which continues to be bullish. Was there any big headline or push behind it after we got that disappointment on the vaccine front yesterday?
That's exactly where I was going to start, Sarah, because the answer is really no. It's not really news-driven. It wasn't economic data-driven or really earnings-driven. I think it's another day went by without seeing a flare-up of new infections, without really getting in the way of this idea that slowly we're going to allow the business to resume incrementally and for companies to heal. And what that means is that the support programs put in place, maybe there's a shot that they actually are going to be enough for now. Now, all that to me is also in the context of big professional investors who have felt underexposed to the market if things are not going to, have another scare. And that to me was really, you could see the footprints of that in the way we did have these sort of just kind of slow grind higher across both growth and value stocks. And whether it continues, I really don't know. I mean, you can definitely make an argument that S&P tags 300 seems like the culmination of this initial phase of the rebound. Who knows? We have to wait and see from here. It gets real once we get past more of the who knows. But I do think that's what's been happening mostly in the last couple of weeks.
S&P 300, I think, meaning 3,000 there. So we close at 29.
3,000. Sorry.
7, I mean,
300 on the SPY. Yeah.
Sorry. How important is the 3,000 level? Obviously, closing a little below it today, Mike.
It's important to some degree now. It's just because, the 200-day moving average is there. As we pointed out yesterday, it's kind of flattish that average right now. So that often has been an excuse for the market to kind of scissor above and below when it's been coming from a big sell-off to the upside. So maybe that's why it has significance. Also, we haven't been above 3,000 in the history of the world until last October when we got liftoff toward the early 2020 highs. That was that kind of big momentum move that we got. So it's not as if that we're talking about still being at depressed levels on the index level. But if you look down below the surface, there's just a ton of stocks that are down a whole lot more than that just because of the distribution of that index.
Josh Brown, I feel like you've been a little skeptical of this entire rally comeback. And now that we're sitting at levels we haven't seen since March 6th, I mean, are you rethinking your position at all? Are you rethinking your ability to be bullish in this environment?
No, I'm still skeptical, and I'm going to tell you why. And Mike just made some really good points. We're in these stocks, like everyone is. The whole world owns Apple, Amazon. They're the biggest weightings in everything. So it's not like I'm sitting here saying, don't believe that stocks are higher. As I pointed out in the previous block, the stocks that are higher happen to be really big, and they deserve to be higher. They have never been in a better environment for what's going on and what they do. So I'm happy with that part of the market. The problem becomes when you start to look at things like, for example, the Dow versus the NASDAQ. The disparity is ridiculous. The Dow is down about 5% or so over the last year, while the NASDAQ is up close to 27%. It's almost like these are two classes of stocks living on different planets. And thank God Apple's in the Dow also.
The Russell NASDAQ is even sharper.
Correct. So I feel it's important to bear in mind, in April, about a third of people who are supposed to pay rent didn't. And we'll get the May data very soon. I think it's important to point out in April, about 15 million credit cards went unpaid. And we've got forbearance. We've got the banks working with consumers, so they're not going to be racked with penalty fees. But this is the environment we're in. 30 million people have been thrown out of work in the last 5 weeks. We hope that for the majority of them, it's just temporary and they're coming back soon. But we can't know. We can't know. So I don't think it makes sense if, let's say, you panicked and you sold in late February, early March. I'm sorry for you if you did that. But if you panicked, I don't think you look at the markets now and say, oh, my God, I have to put everything back on that I had taken off. I just don't think it's necessary. So I know there are a lot of people in that position. I can't give people individual advice. I can only tell people the way to avoid that happening to you is to have a plan in advance of how you're going to behave. Decide what are the things that are going to cause me to sell, what are the things that are going to cause me to buy back. And if it's you interpreting economic data, you're already a mess. Okay, so have it be something based more on your own life, your own situation. So here's what I'm going to tell you: a majority of investors got this right. If you look at Vanguard data, if you look at Fidelity data, hundreds of millions of people did not alter their asset allocation, did not freeze 401k money coming in. They left everything alone. It happened too fast for them to get scared in some cases. And thank God it worked out well for a majority of investors.
Josh, so where do you stand then on the sort of Amazon versus Wells Fargo trade for the rest of 2020?
I don't have that trade on. So, Wells Fargo versus Amazon. So be long one and be underweight the other and wait for mean reversion. I don't have that trade on. I don't think it'll work. So it's not that you don't want to have any exposure to banks. It's that I don't think you want to make a bet that the environment between now and the end of the year is going to so materially change that the best company in the world all of a sudden is going to be overtaken in gains by one of the worst run banks of the last decade. It's just not, for me, it's not how I've ever done well. I like big trends. I like secular growth. I like companies that are doing well. I know there are people that like to go the other way and fade. This has been a really, really painful market for people who see themselves as faders, knee-jerk contrarians, etc. It's just not working out well right now.
We've got an earnings report out. It's Expedia, and Seema Modi has it for us. Seema.
Wilfred, a significant miss on its bottom line. Expedia reporting first quarter results, an adjusted loss of $1.83 versus the estimate of a loss of $1.23. Revenue, a slight beat at $2.21 billion. Gross bookings, the key metric again to watch for online travel, down 39% in the first quarter, year over year. Newly appointed CEO of Expedia, Peter Kern, saying like all travel companies, Expedia suffered a major major reduction in business since the onset of COVID-19. Now, remember, the company has taken steps to boost its liquidity position. Over the past 6 weeks, the company has raised about $3.2 billion in debt and equity, including over $1 billion investment from private equity firms Silver Lake Partners and Apollo Global. Those two private equity firms did gain a board seat. So the question on the conference call, which comes up at 4:30 p.m. Eastern, is whether more cost cuts are in store and what other changes could be in the cards for Expedia. There was some rumors that with these two private equity firms, some type of sale of a certain brand could be in the cards for this online travel company. That call again starts at 4:30 p.m. And you may remember, Wilfred and Sarah, on the last earnings call, it was certainly one that got a lot of attention with Chairman of Expedia, Barry Diller, sounding off, calling out the work culture, calling it lazy. So we'll have to see what the narrative's like on this call. Back to you.
Seema, thanks so much for that. Mike Santoli, this is one of those stocks that's enjoyed a rally from its lows. It's up almost 100% from its March lows, and just this past week running up significantly into these earnings.
Yes, it looks like actually a lot of stocks that are right at the center of the most impacted areas of this economy, because it was down well more than 50% at those lows. And then it's had this very kind of volatile sawtooth recovery, and it's gotten back not even half of those losses. So it is all about, the direction of the incremental change in terms of what their baseline business levels are. Very hard to handicap because things were not, as Seema was saying, necessarily going great in this industry or with this company beforehand. So to me, it's a lot of, what Josh was saying before, the overall market is making the case this is not anymore looking like a classic bear market bounce that's just doomed and it's going to roll over necessarily because it's up so much in 40 days. However, those parts of the market that really were impacted, you haven't really escaped the gravitational pull of those lows in a decisive or convincing way. So that's why I do think it does seem as if there are two tiers of this market to study.
If you told me, Josh.
Hang on, Josh. Hey, Josh, I do want to come back to you, but first let's get to Take Two Interactive. We've got Josh Lipton on that. Josh.
So, Sarah, that stock halted. It's going to be resuming trading around 4:25 Eastern, but we do have the results. Take Two reporting Q4 EPS of $1.07. Not clear if that's comparable to consensus, but bookings here, $729 million. The street was closer to $584 million, so a big beat there. The Q1 forecast looking for between 90 cents and $1. Again, not clear if that's comparable, but again, bookings, big beat in terms of what they're looking for, 800 to 850 million for Q1. Analysts had thought closer to 498 million. For the year, though, a bit light. They're looking for bookings, they say, between 2.55 and 2.65 billion. The street was closer to 2.7 billion. Though remember, this is a company that does historically guide conservatively relative to consensus. In terms of the segments, digital online, 635 million. That's a beat. That would include recurring revenue, what gamers spend in game, as well as digital downloads. The other segment, physical retail, at 126 million. Also beating expectations. Quote here from the company as well, while fiscal 2021, they say, will be a light year for new releases, we expect to deliver strong results due to the diversity and strength of our catalog and live service offerings. This conference call kicks off at 4:30 Eastern, guys.
Josh Lipton. Josh, thank you very much. Josh Brown, didn't mean to cut you off. Wanted to get your thoughts.
No, that's okay.
On the broader market. I think that's where you were going to go, or where you wanted to talk travel stocks.
I wanted to talk Expedia. This company is only worth $11 billion in market cap right now. So I think it's like one of the biggest bargains out there. If you want to bet that Americans will never travel again, then ignore what I'm about to say. If you want to make the alternative bet, which is that, yes, we'll wear masks for 6 months, then there'll be a vaccine, people will bring wet wipes on the plane, but overall things aren't going to radically change, then Expedia is a better bet than the airlines. If you know you're going to get a recovery across the board, why would you want the companies that are encumbered by debt and now new government conditions over what they can do with their workforce, et cetera, et cetera? Expedia is an easier bet because they're going to benefit too, and it's an internet company, and it's a high margin company. And going into tonight,
75% of the time over the last 2 years, they've beaten earnings. They're a very well-run business, well-capitalized. So it makes sense that this stock has had a nice recovery. And if you told me, Josh, pick a travel stock, you can't look at it for 3 years. We're going to put it in the vault. Check it again as the world forgets about. This would be the one I would want to be in. I'm not in it yet, but I might.
Even after it's 100% bounce from March lows?
Well, so there's strategy and there's tactics. Strategically, this is the name I like. Tactically, is today the day I buy it after a monster move this week? Maybe not.
Josh Brown, thanks so much.
I have a tactical question for you, Josh. Josh, just really quickly, you said at the onset, I just want to be really clear. You're feeling bearish in sentiment or in thought, but you're positioned bullishly?
Well, we run a strategic model and a tactical model for clients. It's a great question. The strategic model doesn't sell out of stocks. It rebalances into weakness by selling bonds. Our tactical model has more NASDAQ and almost no S&P and no international. So you can infer that that's the overall posture, with the caveat that every household has a different mix of those strategies, and no household looks exactly the same because this is not a hedge fund. Every client has a different investment objective and needs a different level of risk. So to answer your question, I'm very skeptical that the economy just wakes up a month from now and everything looks great. I do acknowledge the fact that some of the comps are going to look incredible. We're going to see things like airlines up 300% in a month, and it's going to sound really great. The environment's still going to be lousy. So we don't know what investor sentiment will be, even if we know that economy will reopen.
Josh Brown, great to see you as always. Thanks for joining us. Up next, we will ask BlackRock's Jeffrey Rosenberg whether he thinks negative rates could be coming to the U.S. in the near future and what it would mean for investors. We're back in 90 seconds.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening.
The right time with Bomani Jones.
While he was gone, Al had some kind of vote to make him the manager. You remember he used to come up all the time in the Raiders game that he was the manager.
Welcome back. Let's get to Bob Pisani for a summary of today's market action. Hey, Bob.
Highest since early March for the S&P 500. We're approaching that 200-day moving average, well, 99, somewhere around there, about 30 points away. We'll keep an eye on that. The right leadership today. I keep emphasizing the need to broaden out the rally. Can't just be FANG stocks, folks, and we're getting that today. What do we need? We need banks. We need energy. We need industrials. Guess what we got? We got banks, energies, and industrials. There's American Express had a great day. Chevron's up like 5-6% this week. Caterpillar's probably up 7-8% this week. Boeing's up double digits, up 10 or 11%, and another good day today. So banks, energy, industrials, broadening of the market. Defensive stocks were a little weaker, but that's fine. They had a nice run a little earlier. So healthcare was a leadership group. So Merck, Pfizer, United Health a little weaker. Johnson & Johnson here. If people ask me about Home Depot, hey, Bob, how come that wasn't so good today? Well, have you looked at Home Depot's chart? This is a perfect V, essentially. It hit a new high, folks, just yesterday, for crying out loud. It's fully valued. So given all the added expenses, no surprise it wasn't doing too much today. Just want to note quickly, we have a IPO, believe it or not, yes, at the New York Stock Exchange. It's going to happen. It's pricing tonight, the next hour or so. This is Select Quote. You know, these guys, they do the insurance quotation sites, and they're going to price $25 million at 17 to 19. This is a pretty big deal. 400 to 500 million. This will price at the New York Stock Exchange overnight and price for trading tomorrow. Keep an eye on that one. Big for baby boomers looking for insurance policies. Guys, back to you.
It's odd to have an IPO at the stock exchange with the floor not even open for trading. Bob, thanks. The Treasury's 20-year bonds met with some pretty strong demand after being auctioned for the first time since 1986 earlier today. Joining us for more on the bond trade is Jeffrey Rosenberg, portfolio manager of the BlackRock Systematic Multi-Strategy Fund. Jeff, thanks for joining us. What does the demand and the test of the market for 20-year bonds say about the overall environment and the bigger picture right now?
Well, it says two things. It says, first of all, we're going to get a lot more issuance. And, reopening the 20-year size was bigger than expected. And this is just the tip of the iceberg of what we're going to see from Treasury auction sizes on all parts of the curve going forward as we look to pay for and fund this historic expansion of fiscal policy. So that being said, it went a little bit better than expected, but this is a taste of stuff to come.
So what's your view, Jeffrey, on U.S. Treasuries? Would you be a buyer of them at the moment?
So, the U.S. Treasury market is in a very different place. And, the other big news outside of course, the Treasury auction is the FOMC minutes, and everyone was very focused on whether we'd get more clarity about how the policy is going to evolve beyond just simply supporting market functioning. And we didn't really get that today. We'll look for that in the future. But what we have underlying support for market functioning was some discussion around what many market participants have been talking about is the policy of implicit yield curve control. So what that means is we're no longer really setting Treasury yields. Are we buyers? Are we sellers based on economic fundamentals, expectations of inflation? We're simply looking to what is the Fed going to do? What rates will they tolerate? What curve shape will they want to see? Because this is no longer really a free market that's determining prices, but really the Fed using its balance sheet to offset the supply.
So are you saying that the bond market is totally disconnected from the economic reality?
No, it's not totally disconnected because the economic reality is what is ultimately driving the Fed's policy decisions, the attainment of their objectives. But there's a much, much more forceful intervention in the market today. In a very short period of time, we have effectively altered the structure of how monetary and fiscal policy works. And you have to appreciate how large of a change it is when the Fed took interest rates to zero and said our balance sheet is for the use of fiscal policy. We will maintain and support market functioning. We have seen an enormous expansion of the balance sheet in order to accomplish that. And so, yes, you're suspending a lot of the old ways of thinking about how investors set prices and injecting a huge new player, the unlimited size of the Fed's balance sheet. So this is absolutely a huge structural change in how investors assess, how we assess, what is value, what is the right level for bonds in the market.
Jeffrey, what are investors doing with fixed income? I mean, are they still treating it overall as a safe haven and they don't really kind of care how much it's run up, or are they kind of price sensitive and selling their bond allocations?
Well, it's interesting. I listened in to the earlier speaker, and he was talking about, how he uses bonds and he shifts his stock allocation and uses bonds out of that. And that's a very traditional way of thinking about stock bond allocation. But I think and investors are really going to have to rethink that assessment in the environment of what I just described as a very quick restructuring of how the bond market works. You have now the proximity to the zero lower bound. So the biggest issue now, if you're using bonds as safety to offset your equities, well, you just have a lot less of that safety in the potential for bond yields to fall. You're much closer to the zero lower bound. So you still have it. The Fed will ramp up forward guidance and QE if there's another downturn. But the degree to which you're going to get that benefit is much, much lower. And so you're going to need to rethink what that mixture of stock bonds means in a world of zero interest rates and in a world where the 30-year is much closer and the back end of the curve is much closer to zero interest rates than we saw the last time right after the 2008 crisis that we had zero interest rate policy. So it is a very different environment for bond investing.
Jeffrey, thanks so much for joining us.
Thank you. Thanks.
Jeffrey Rosenberg of the BlackRock Systematic Bond Fund. L Brand's earnings are out. Courtney Reagan has the numbers. Court.
I will. So for L Brand's first quarter, they are reporting a loss of 99 cents. That's wider than what the street was looking for, estimating the loss would be about 72 cents. Revenues also missed expectations at $1.65 billion. The street was looking for $1.72 billion. Overall comps for L Brands, which remember is now Bath & Body Works and Victoria's Secret, were actually up 4%, but very interesting divergence within that. Bath & Body Works comps were up 41% because the online business was up 85%. Remember, they sell hand sanitizer, while Victoria's Secret comps total were down 13%. Again, the physical stores for this retailer closed during much of the quarter. Shares of L Brands bouncing around just a little bit, but now effectively unchanged. Back over to you.
Cool. Thanks so much for that. Now, the new home of high fashion could be Amazon, possibly. Vogue editor-in-chief Anna Wintour will tell us why the fashion community is turning to the online giant to boost sales in an exclusive interview coming up.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
Okay, here we go. With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL show, where a rotating cast of Ringer experts talk with players, coaches, and special guests about the NFL landscape. A lot of the other teams that we consider. Or ESPN's NFL Live.
If there are some delays because of the COVID-19.
Search sports on TuneIn to explore these pods and much more.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Connor to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search classic game replays to start listening.
Fighting the pandemic on all fronts.
16,000 volunteers are lining up to be infected with COVID-19.
From Washington to Wall Street to your street. Markets in turmoil tonight. Watch and listen live on the CNBC app.
Just want to point out shares of Take-Two Interactive, the video game maker, resumed trading. They were halted for their earnings, sharply higher, up more than 5%. They were up about 7% a moment ago after profit more than doubled in the fourth quarter. Revenues, bookings, all coming in stronger. CEO Strauss Zelnick saying in the release, nearly all of our titles outperformed in the fourth quarter as people remained home during the pandemic. We'll send it now over to Mike Santoli for a look at market sentiment and where we stand right now. Mike.
Yeah, Sarah, it's a little more upbeat. I would call it mixed at this point. Take a look at the weekly Investors Intelligence survey of newsletter writers, advisors, things like that. It's solidly bullish now. I'd say more neutral versus its history, about twice as many bulls as bears. Boy, look at back in March, though. That was a good contrarian bullish signal, contrarian bullish, when it was negative, basically more bears than bulls. I'd call it neutral, though definitely not anymore a tailwind for stocks as a sentiment indicator as much. Now, take a look at the put-call ratio. Now we're hitting lows that are basically at the bottom end of the range from the last couple of years. This is short-term options traders. This is starting to surface as a little bit of a complacency signal. So maybe tactically means it could become a headwind for stocks making further progress right here, guys.
Mike, thanks so much for that. Very interesting indeed. Breaking news on Aurora Cannabis. Frank Collins got it for us. Frank?
Hey there, well, shares of Aurora up about 16% right now after announcing an all-stock deal to buy the company Reliva, U.S. CBD company, for $40 million. Reliva's products are sold in 20,000 U.S. retail outlets, including Circle K convenience stores, and all products are $20 or less, something that the CEO of Reliva said is very key in the current economic environment. The current estimates for the CBD market is that it'll grow to about $25 billion by 2025. Again, shares of Aurora rising about 18% after hours trading after announcing this deal. Back over to you.
Frank, thanks so much for that big jump there. Up next, we will ask the CEO of Truist whether he thinks the financial industry could be set for another wave of mergers. And tonight, 7 p.m., Main Street in crisis, the struggle for survival for some local businesses in Springfield, Ohio, plus performer and businessman Pitbull stepping up for Latino business owners. And will your summer vacation exist this year? All of that comes up tonight, 7 p.m. with Scott Wapner.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening.
The Mina Kimes Show podcast.
Kevin Clark.
If Josh Allen became the 10th best quarterback in football this year, they'd probably win 14 games. Am I wrong about that?
No. If you as a quarterback can't win in the Bills' situation right now, they should not extend you. So many teams, Jets, do not have the information.
For bundling made easy, go to geico.com.
The kitchen, the basement, wherever your office is, the global credit market is open. And Open Trading will help you save transaction costs. Stay safe, stay home, stay in the market. Market access.
Welcome back. Truist doubling its coronavirus relief fund to $50 million. The additional $25 million will go towards bringing technology services to undervalued communities, aid small businesses and volunteer efforts. Truist CEO Kelly King joins us now. Kelly, very good afternoon to you.
Hey, Will, how are you? Good to be with you.
We're very well, thank you, Kelly. I think we'll get to some of that philanthropic efforts in a moment, but I just wanted to start more broadly in terms of whether or not you're seeing optimism in terms of the economic activity you're seeing, which the broader indices, particularly the Nasdaq, clearly pointing towards, even if bank share prices themselves suggesting the opposite?
Yes, there are some green shoots out there in an otherwise dismal environment. I was just looking at some numbers in the last couple of days. For example, in our commercial community bank, we had the highest level of production in the month of April that we've ever had. We're seeing robust mortgage activity. Interestingly, even consumer activity, judged by looking at our debit and credit card transaction activity, is down year over year, but still not as far down as it was last week and the week before. And interestingly, if you take travel out, it's actually up. So, it's not as bleak as we might think, when we look around in terms of the tragedy of the medical